Good afternoon, students. I hope I am audible properly. Yes, great. Okay. So, I hope your studies are going well for your foundation exams. Okay. Now, as you know, we are meeting here for the revision fast track of CA Foundation Law, a subject which is a nightmare for many people. Correct. Okay. So we'll be doing the fast track properly, but yes, we'll be covering almost every aspect. Okay. And at the end, we'll also discuss how to present your answers and all. Okay. So without wasting time, let's start. This is Professor Harshendra on behalf of K Shah Classes. Let's start. Okay, with the fast track course. Now, how will be starting the fast track? Okay, there is a sequence which I have in mind. We'll be doing in that way. So first, we'll be doing Companies Act 2013. Okay, this is what we'll be covering. Second, we'll be covering Negotiable Instrument Act. Okay. Third, we'll be going with Contract Act. Contract, both general as well as special. Fourth, we'll be going with SOGA, Sale of Goods Act. Fifth, we'll be going with Partnership Act. Sixth, we'll go LLP. And seventh, Indian Regulatory Framework. This is how we'll be going. Okay. Let's start without wasting time. Let's see. So guys, we are starting with Companies Act 2013. Okay. So what does this act tell? Let's first understand the name of the act. The name entitles us that, boss, in the year 2013, one act was passed. What is the date of passing of the act? 29th August 2013. Sir, this act was passed on 29th August 2013. That means the President of India gave the consent to that bill. Okay, Companies Bill on this day. But sir, from which date it was applicable? From which date it was enforced? Okay, so it is 1st April 2014. Here also only 98 sections were enforced, not the whole act was enforced. Slowly the whole act was enforced. Sir, this act is passed for what purpose? This act is passed to govern and regulate companies in India. Sir, what do you mean by govern and regulate? This act is going to tell you, it is going to define you what is a company. Then this act is going to tell you how to form companies. Then this act is going to tell you how to manage companies. Okay, like how to file balance sheet, P&L, every damn thing, with which authority. Similarly, this act is going to tell you how to wind up the companies. So from the formation till the winding up, everything is mentioned here. That is called as govern and regulate. Am I clear? Yes. Now, sir, this whole act is made for the word companies. So let us understand what is company. See, understand you are going to write a law paper. So in law paper, today we'll be completing Companies Act plus Negotiable before everything before presentment will be able to complete. Okay. Now, see, so basically understand one thing. In law paper, your explanation doesn't matter. In law paper, you have to write law. I know, like every time since years we are writing answers on the basis of explain. Here you don't have to explain anything. every question will end with the word referring to the provisions of Indian Contract Act, referring to the provisions of Sale of Goods Act, referring to the provisions of Companies Act. Advice. So basically you have to refer, the question itself mentions, refer the provisions and answer. So unless and until you write the provisions, provisions can be either in the form of section numbers, provision can be in the form of case law name. Okay. Unless and until you write that, you are not going to get marks. So obviously whenever you study, at that time you have to, whenever you are studying, you have to underline the provisions wherever you come across the provisions. That is the text of the answer. Okay. Like example, they are asking some question on example small company. Okay. Or they are asking a question in Indian Contract Act on nemo that quod not habet exception. So basically they'll give you a case law and they'll tell you advice referring to the provisions of the act. So indirectly they are asking you explain section 30 subsection 2 of Indian Contract Act, which is one of the exceptions of nemo that quod non habet. So directly they would not ask you explain section 30 subsection 2, explain section 28. No, because if that, like that, if they ask, everyone will write the answer. But indirectly they are going to ask you that only, or they are asking you that only. So never write your explanations. Your the first para should be the provision what they want to ask, or what they are intending to ask you. That is what is the answer that you have to write. Then basically facts of the case. Okay, and then beta your opinion. Don't write conclusion, opinion. In opinion you can explain whatever you want to. If you just focus on explanation, so you are actually not writing what they want to read in your paper. So understand, whenever you solve questions, at that time the moment you read the question, does your mind exactly tell you the provision? If yes, okay, then yes, you are going to clear the exams. Okay. If no, then basically you have to do hard work, more practice. Am I clear? That is whole and soul of law paper. Okay. Sir, are you required to by heart? I would say kind of provision wherever you see, kind of mix of by heart and understanding you should do. Okay, because explanation will give everything. Provision also obviously I'll tell you. But yes, my explanation you don't have to remember. By default you'll remember. You have to work hard on the provisions. Okay. Now, so here, sir, what is company? You don't have to explain what is company. You have to write what is company. You have to define what is company. Okay, because definition will actually better distinguish your answers. Okay, or distinguish the intention of lawmaker. So generally what we say, what is a company? So people say, sir, generally, okay, separate legal entity, okay, perpetual succession and all. These are the features of company. You have to write what is a company. Okay, so when you try to explain company, you are writing features, but the person is not asking you features. He is asking you what is a company. Okay. Now, writing section number, for me, yes, it is necessary, but in case you don't remember, then it's fine. Writing case law is important, yes. Okay, see, hardly only in your Indian Contract Act there are many case laws which are explained. Only those case laws you have to remember, and you have to explain. If you are referring a case law and explaining the answer, you have to explain what happened in the case law, because in that question they are asking you indirectly, explain this, explain Balfour versus Balfour, explain Lalman Shukla versus Gauri Dutt, explain Salmon versus Salmon and Company Limited. Okay, so they are asking you that only, but through a case law. The moment you understand this thing, you will clear the law exams. Okay, yes, bit of hard work is there. Okay, I don't deny, but it is what it is. Simple as that. Yes. Okay. So, sir, what is a company? Section 2, clause 20 defines you what is a company. What is company, beta? Company means a company. Arey, sir, what nonsense. It's fine. I have not made the definition. Okay, I told you it is what it is. I'll change the word for you for explanation. Company means an entity. Company means an entity incorporated under this act. This act means which act? Companies Act 2013. under this Act, Companies Act 2013, or under previous company law. Sir, what is previous company law? Before 2013 it was 1956, Companies Act 1956. Before it was Companies Act 1913. Before it was Companies Act 1882. Before it was Companies Act 1866. Before that 1857, and the first Companies Act in India, Companies Act 1850. So if your entity is formed under Companies Act only, formed and registered under Companies Act, be it 2013, be it 1956, be it 1913, 1882, 1862, 1857, 1850, but under Companies Act only, then only your entity will be called as company and entire Companies Act will be applicable to it. Am I clear with this thing? Understood? Okay. So we'll take one example. See, Reliance Industries Limited. Is it a company? Answer is yes, because it is formed under Companies Act 1956. But sir, if I say Life Insurance Corporation of India, sir, share market, there are shares of LIC, buying and selling can be done. So it's a company? No. LIC, it's not a company. It is an entity formed under LIC Act 1956. So such entities we call it as corporation. So these are not companies. So Companies Act will not be completely applicable to it. I hope I am clear with this. Yes? Okay. Done. Now, now there is one basic fundamental principle of a company. Now what is the basic fundamental principle of a company? The person forming the company and the company are two different persons in the eyes of law. You all know this thing. Okay. Like example, I have 1 crore rupees. I formed a company, put the entire 1 crore rupees in the company. Indirectly, the entire capital is with me. But I and the company are same person or different person in the eyes of law? Obviously different person in the eyes of law. Same but different, like that. Am I clear with this thing? Understood? Okay. That is separate legal entity. For that, two cases are there: Salmon versus Salmon and Company Limited, and Macura versus Northern Assurance Company Limited. Now, what happened in Salmon versus Salmon and Company Limited? Let's understand. See, Salmon was the sole proprietor and he was into the business of manufacturing shoes. Sole proprietor. Very hard working person. But what happened? This actually happens in real life also. If you are a sole proprietor, you are always considered as a small entity. Irrespective of how hard working, how many people you have under you, you are considered a small entity. You will not get big orders. Same happened with Salmon. Okay. In fact, Salmon shoes even now you can get in the market. So what happened? Let's see. So same thing happened with Salmon. So what Salmon did? Salmon formed a company, Salmon and Company Limited. Okay. With Salmon, his wife, his daughter and 4 sons as members. Public company, 7 members were there. MD was Salmon, other directors were his son. But now Salmon and Company Limited is formed. But in order to run the company better, that company should have raw materials, machinery, okay, then basically clients, indirectly business. Does Salmon and Company Limited have anything? So what Salmon did, his sole proprietorship was there. So he sold his sole proprietorship business, okay, to the company. Now, who will pay consideration to whom? Salmon and Company Limited will pay consideration to Salmon's sole proprietorship. Both are different person in the eyes of law. The consideration was decided as 38,857 euros. Amount doesn't matter to us. How the consideration was given? 20,000 worth shares were issued to Salmon by the company. 10,000 worth secured debentures were issued. What is secured debenture? Debenture is debt. Secured means in case some security is given against the debt. Okay, like we said, a mortgage, if you don't repay the debt, that security will be taken by that debenture holder, and rest 8,000 odd was given in cash. Company started floating. After a while, company went into huge losses. Now, so much of losses that it was not able to pay creditors. So basically, the creditors, okay, outside creditors filed a suit for petition. They filed a petition for winding up. Matter went to the smaller court. Smaller court told yes, correct. Okay, you should file a petition for winding up. Okay, but what happened in winding up? What you do? You sell the asset, pay the debts. During winding up, beta, okay, Salmon and Company Limited had assets only of 6,050 euros, not more than that. But the liabilities were 18,000 euros. Now, out of 18,000 euros, beta, 8,000 was of unsecured creditors who filed a petition. 10,000 was beta whom? Secured debenture holder. That was Salmon only. Tell me, during winding up, secured people will be paid first or unsecured? Secured, obviously. So the whole 6,050 was paid to Salmon. Unsecured creditors, okay, had an issue. They told to the smaller courts, "Arey, what nonsense is this? Okay, this is Salmon only. The company was formed by Salmon, MD is Salmon, profit is taken by Salmon. In case there is a loss, that money also is taken by Salmon. Salmon is just taking money from one pocket and putting in another pocket in the name of company." Smaller court told, "Ha, correct. Money should go to unsecured creditors." But maybe Salmon had attended my lecture. So Salmon appealed to the House of Lords, the courts there, Supreme Courts there. This is a case of big UK. The House of Lords gave a decision that, boss, unsecured creditors, what is your problem? They told the problem. The court told, tell me, did Salmon make payment to Salmon or Salmon and Company Limited made a payment to Salmon? Obviously, Salmon and Company Limited made payment to Salmon. But they told, but sir, it is his company only. Wrong. As per Companies Act, person forming the company and the company are two different persons in the eyes of law. So Salmon did not make payment to Salmon. Company made payment to Salmon because Salmon sold his sole proprietorship business. So is Salmon doing any kind of fraud here? No. Just to see that he doesn't make payment to you, will he wind up his company? No. That's the reason, beta, the payment will be with whom? Salmon. That was the case. Salmon versus Salmon and Company. Am I clear with this? Separate legal entity. Next, Macquarie versus Northern Assurance Company Limited. What happened here? Let's understand the case. Tell me, just now I told you, example, I have 1 crore rupees. I put 1 crore rupees in the company. Now that 1 crore is my money or company's money? Company's money, obviously. From that 1 crore, company purchased goods. That goods, who's the owner of the goods? I am the owner or the company is the owner? Company is the owner, obviously. Now, the company made a insurance, took an insurance of that goods. So who should be the nominee of that insurance? Owner of the goods. Who's the owner? Company. Can basically the sole person who's holding the entire capital, like can I be the nominee under the insurance? No, because it's not my goods, it's company's goods. Okay, that was the case. Am I clear with this thing? Okay, so the case tells ki a person holding entire share capital of the company, okay, cannot be a nominee under insurance of the stocks. Am I clear? So that was the second case. Okay, these two cases. Okay. Okay, now, so basic thing we understood, company is different and the person forming the company is different. But tell me, so that is called as corporate personality of company. Am I clear? Now, one question comes, Vijay Mallya and Kingfisher Airlines. Yes, obviously. If you see his video, if you see his reels are there, he's giving a podcast. So at that time he's like, I did not take a loan, I was a guarantor. Yes or no? Kingfisher Airlines took loan. Like that. Now, sir, we understood corporate personality of company, separate legal entity. But sir, is corporate personality of company absolute in nature? Is it absolute? Like whatever happens, company and the person forming the company, will be different person, they will never be treated the same. Answer is no. There is the exception. Okay? That is called as lifting of corporate will. Now what is this lifting of corporate will? Let's understand. Here I am a company, I am a company here. Okay? Not I am, chalo, there is a company. And there are person forming and managing the company. Are they same person or different person in the eyes of law? Answer is different, same but different. But okay, so it is understood that boss companies that has put a wheel, curtain. Okay, because of that curtain they both are different. If we lift the curtain, both will be same or different. In that case, beta, both will be same. Understood? So that is called as lifting of corporate will. So when is it exercised? See, there is no section as such which tells you the lifting of corporate will should be exercised. No. But there have been judicial cases where courts have found that companies had been found for doing fraud. Can a company do fraud on its own? So people initially started forming companies for doing fraud. Let's take example. I formed a company. I know something about companies. I formed a company and I took loans in the name of company. I got the money. I spent the money as I wanted. Okay. Afterwards, 3-4 years later, when the due date of repayment came, he told, sorry, company is into losses. We can't repay the money. I know it is my debt or company's debt. Company's debt, it is not my debt. The max, what will be the max thing? Creditors will sue the company for winding up. Company will wind up. I'll form another company. This is fraud, yes or no? So that's the reason, beta, okay, there are some culprits who are doing fraud in the name of company. These culprits should be punished. That's the reason, beta, okay, the wheel between company and these people will be lifted, treating this company and this fraud people, okay, same person in the eyes of law, and they will be punished. That concept is called as lifting of corporate will. Okay. So, sir, are there any cases for that? Yes, there are cases. Let's understand the cases. Which are the cases? See, 3 cases we'll be discussing. First is Guilford Motor Company versus Mr. Horn. It's a clear case, okay, of fraud. Let's understand. First, I'll change. Let me do some art. Okay, tell me, he is happy or sad? Very sad, no? Very sad. Okay. The reason is that he is an engineer. He did not decide to do commerce and do CA. He is an engineer. Nothing against engineer. Just like randomly I'm taking. Now, so basically he is an engineer and he doesn't have a job. What to do? Mechanical engineer, no job. It was very sad. One day, okay, he was reading newspaper for jobs. He saw there is a company called as Guilford Motor Company. They have given an advertisement for job. Okay, like mechanical engineers can enroll, okay, and they might get the job. Now first we'll understand what is the business of Guilford Motor Company. But a Guilford Motor Company was into providing mechanical services. Now what is mechanical services? Guilford Motor Company had some clients. These clients will pay annual fees to Guilford Motor Company, and Guilford Motor Company will send mechanical engineers, okay, their employees, to the client's place, and they'll do servicing of the vehicles, okay, like that. Now this guy went for an interview, he got selected. Now he'll be happy or sad? He'll be happy, very happy, okay, very happy, very innocent guy. Now when you get a job, the company tells you to enter into contract. So he also entered into contract. In that contract, what was written? See, there are some terms. Mr. Harsh, not Harshni, why will I take my name? Mr. Horn, okay, he is Mr. Horn, shall never solicit Guilford Motor Company's clients to himself. What is solicit? Take away the clients. Okay. So he's like, okay, no problem. He signed the contract. One day, what he did, he started meeting the clients. Okay, and he misapplied his brain. I can say like that. He formed a company, okay, called as BMC. The name is not given, so I am just trying to. This is GMC, this is BMC. And he became the MD of the company. Obviously, he started meeting the clients and started soliciting the clients to whom? Beta, BMC. Am I clear? This is wrong, no? So one day that company understood the fact. Company asked question ki bacha, you have a contract, you told you will never solicit the clients, you are doing it, okay, now be ready for punishment. He's like, hey, you are suing me. Obviously. Sorry sir, you can't sue me. Why? Sir, see, what is written in my contract? Mr. Horn shall never solicit his GMC's client to himself. Am I soliciting to myself? No, clients have been solicited to BMC. So GMC told it is your company, we know you are the MD. Sorry sir, as per companies that I am different, company is different. What an application of mine, correct? They told, okay, we'll sue the company. Bolo, no, sorry sir, you can't sue the company because it is me who has signed the contract, not the company. Boss, heads is also his, tails is also his. Now tell me, beta, okay, can the company sue? But obviously, general thing is no. But tell me, is it a clear case of fraud or not? Yes. When GMC filed a case, the lawyers proved that boss, this guy, okay, came into employment under GMC just to know the clients and using corporate personality or misusing corporate personality is doing all this thing. So tell me, should the wheel between Mr. Hornby and BMC should be there or it should be removed? Answer, it should be removed. And basically court decided to lift the wheel, treating both people same. He breached a contract, Mr. Horn committed a breach of contract and he will be punished. Am I clear? That is the first case law on lifting of corporate wheel. Clear? Everyone? Great, great. Okay. Now the second one. Okay. Note. Okay. So, next is case law, my personal favorite case law, Dinshaw Manekji Petit versus CIT. What do you mean by CIT? Commissioner of Income Tax. Okay, let's understand. See, what is this? This is a case of tax evasion. Okay, see, this is Mr. Dinshaw. What is his name? Dinshaw. What was he doing? He was an investor. He used to invest in companies. Okay, but he was very rich. He got income returns on investment and the returns were so high that he had to pay taxes. But he didn't want to pay tax. What to do now? So he also misapplied the brain. So what did it see? He stopped investing in his name. No, I'll not invest in my name. He formed 4 companies, A, B, C, D. Now he started investing in the name of the companies. So who will get the returns? That companies only. Okay. Now he actually used his brain. Well, that's the reason I'm telling it's my favorite case. He invested in such a way that the returns which he is getting should be below the basic exemption limit. Now understand what is basic exemption limit. Now currently basic exemption limit is given to individuals and HUS, not to companies. Okay. Basic exemption limit means, example, your yearly income is this much, don't pay tax. Above that, if your income is that or your income goes on that, you have to pay tax. Okay, like currently the basic exemption limit would be 5 lakh rupees. Up till 5 lakh rupees, your yearly income, don't pay tax. Beyond that, you have to pay tax. Now, understand. See, 5 lakh, I'm just giving an example. So when this case took place, at that time, companies also had a basic exemption limit. Okay, and he misutilized that. Example, basic exemption limit at that time was 1 lakh. That means up till 1 lakh, if your income is there, no tax. Beyond that, you have to pay tax. So this guy invested in the name of company in such a way that every company should get returns 1 lakh only, not more than that. Understood? So, example, he invested in his own name. In case the total income would be 4 lakhs, basic exemption limit will be 1 lakh, and on 3 lakhs he had to pay tax. But what he did, he invested in the name of companies. 1 lakh, 1 lakh, 1 lakh, 1 lakh would be the return, ABCD. Basic exemption limit every company would get 1 lakh, 1 lakh, 1 lakh, 1 lakh, and taxable income would be 0, 0, 0. See, 1 rupee tax also he did not pay. But he wants the money also. Okay, money is with companies. So he took the entire money back from the companies in the form of loans. And boss, loan, is income tax will be on income, loan is not an income. 4 lakh rupees entirely he got back without paying a single rupee of tax. Is it an application of mind or not? Understood? But what happened? This he continued for some years. But one day, one commissioner of income tax came and he saw the files. And he's like, what is this company is doing, investing and giving loan to Dinshaw? Okay. He asked and went and asked question to Dinshaw, sir, these companies are giving continuous loan to you. Is their wish? And you are taking loan also. My wish. And you are not repaying and they are not charging any interest. It is our wish. Okay, wish you are doing. Okay, no problem. So he searched the documents and all, balance sheet, and he read properly. And it was understood that these companies are not doing any business, right? They are just beta investing in companies and giving loan. Bank is it a bank? No. So CIT filed a case. Matter went into court, and basically then it was proved that boss, these companies are just shell companies. They are not doing any business. They are just means of evading taxes. Yes or no? Okay. So this wheel between Dinshaw and these companies should be there or it should be lifted. Answer is it should be lifted. The wheel was lifted. He had to pay tax, interest, penalty, everything. Understood? Okay. Great. Clear? So, third case. What is the third case? Daimler Company Limited versus Continental Tires and Rubber Company. Okay, good case. This is a case of alien enemy character. Okay, see what happened in the game. Beautiful case. This case is between two companies belonging to two different countries, England and Germany. I'm not taking England and Germany example because I always say this thing. I'll take India and Pakistan, because when we say India, our heart beats. When we say Pakistan, it beats faster. Yes or no? Correct, na? So see, now what happened? There is a company A Limited. Okay, this is an Indian company, and there is one more company B Limited. It is also an Indian company. Now, but the point is, what is the business? B Limited is into manufacturing rubber tires. A Limited is wholesaler of tires, so they purchase from B Limited. Okay. But the whole scene is that B Limited's promoters and directors are Pakistan resident, very innocent people. Okay, understood? Sarcastically. Now, what happened? A Limited and B Limited, between them, one day A Limited purchased some tires, okay, from B Limited on 3 months credit. Business runs on credit only. Now they gave the tires. It's been 3, but in these 3 months, what happened? You know, India versus Pakistan. There was no match. Okay, there was a war. In 3 months, but a war is continuing. A due date came for payment. B Limited asked payment from A Limited. A Limited told, sorry, I do not have money. I can't pay. Matter went into the court. The court told A Limited, you did not make payment? Well, no. Very good. High five. Good. So he's like, what nonsense? High five and all you are doing. It is my money. Why are you telling him, okay, good, very good, you didn't make payment? What court told? See, if A Limited makes payment to you, you will transfer the payment to promoters, directors in the form of fees, dividend and all profits. They will pay tax. And during war situation, what will Pakistan government do of the tax money? Yes or no? It is financing our own death. So obviously it's good, na? Contract with alien enemy you cannot do during war. Yes, contract with alien enemy is void. So they told me, sir, but how can you say it's a alien enemy? We accept that promoters and directors are Pakistan resident. Yes, we accept that. But sir, understand, this company is formed in India. It's an Indian company. And company and the person forming the company are two different persons in the eyes of law. So how can you say it's a Pakistan based company? Correct, no? But obviously that is the fact. Courts told this thing, the same thing. It was, yes, we understand that these are two different persons. But during war situations, if all Indian companies start paying money to Pakistan based companies, so we will not have anything. Our soldiers will not have anything. They will have just that Diwali guns. Because no budget. All the budget is with Pakistan. They have Mauser guns, AK-47, everything. Okay, so it is financing our own death. That's the reason during war situation, this will between this company and the promoters and directors should be lifted and will be lifted. It will be Pakistan based company and boss, the contract will be void. Am I clear with this? Understood? If you understood all the three cases, give me a thumbs up quickly. Properly. Great, great. Wow. Great, great, great. Okay, so this was lifting of corporate will, okay, and concept of corporate personality. Okay, so now comes the important part. See, I'll tell you this lesson of Companies Act is divided into 4 to 5 parts. First part is introduction of company. In that you have definition, features, and lifting of corporate will. Definition we have done, main feature we have done, separate legal entity, and lifting of corporate will. Second part is classification of company, which is actually a very important part, to be fair. Okay, now which we are starting. Third part is incorporation of company, how to incorporate a company, procedure of incorporation and all. Fourth part is 2 favorite documents of company, and you are also articles of association and memorandum of association. And fifth part is share and share capital. This part. Okay, understood? So basically first part we have done. Second part, which is I personally feel very important, okay, that part we are going to do now. So let's understand. See, we are doing classification of company. Understand, classification is different from types of companies. Types to only 2 are there, public, private. Classification of company means, you understand what is classification. Like example, one is types of hearse. Okay, that is types. Classification means basically classification will be done on the basis of something. Like, tell me, can I be classified? Can you classify me on the basis of gender? Male, female? Yes. Can you classify me on the basis of literacy? Illiterate, literate? Yes. Can you classify me on the basis of age? Major, minor? Yes. Can you classify me on the basis of nationality? Indian, non-Indian? Yes. Can you classify me on the basis of religion? Hindu, Muslim, Catholic, Sikh, Jain, others? Yes. That is classification. Classification means there will be one thing or one person, he will come under different brackets. Am I clear? On the basis of something. Okay, that is classification. Now here companies can also be classified on the basis of something. Now what are the 4 bases? First is on the basis of liability of member. Second, on the basis of members, very important. On the basis of control, on the basis of capital, and last, other companies. Very important part. Okay, pay attention properly. So see, first is classification on the basis of liability of member. How is the liability of member? On that basis we are classifying companies. Okay, now there are 2 companies, limited and unlimited. Limited liability company, unlimited liability company. Okay, now what do you mean by limited liability company? No rocket science. Here the liability of members is limited. Limited liability company means here the liability of member is limited to a particular extent. Okay, the members will not be liable to the full extent of the company's debts. Okay, up to a particular limit. Unlimited liability company means, okay, there is no limit on the liability of company. Okay, the company's members will be there is no liability on the there is no limit on the liability of members of the company. Okay, the liability of members will extend to the full extent of the debts of the company. I'll give examples also, don't worry. So limited liability company means liability of member is limited. Now limited liability company is divided into 2 parts. Company limited by shares, section 2 clause 22, and company limited by guarantee, section 2 clause 21. Now company limited by shares means what? This is a company which has issued shares. So how to become member in this company? By buying shares, simple. Actually the companies which you people know is our company limited by shares only. Okay, 90% of the companies in India are company limited by shares. So here, if I am a member of a company limited by shares, I buy the shares and become member. So my liability will be limited up to what beta? Limited up to the unpaid face value of shares held by me. Liability will be limited up to what beta? Unpaid face value of shares held by me. So what do you mean by that? Let's see. Example, I have written Reliance Industries Limited, Tata Sons Private Limited, okay, Tata Motors Limited. Example, I buy one share of Reliance. Face value is 10 rupees. Okay, paid up value is 6. So what is the unpaid value of now? 4 rupees. Now beta, example, the company went into winding up, the liability of the company is 10,000 crores. But will I be liable for 10,000 crores? No, my liability will be limited only up to how much beta? 4 rupees. Am I clear with this thing? Understood? Simple. Now, next, now you will be like, so then who will pay the rest of the amount? That is bad debt for creditor. Nobody is going to pay. Okay. Now, company limited by guarantee, section 2 clause 21. That it's a company. This company generally don't issue shares. I am telling generally, means exceptions are there. Generally, they don't issue shares. So, how to become member, sir? If you want to become a member in this company, you have to give a guarantee to the company, okay, of a particular amount, say 1 lakh rupees. So what is this guarantee telling? You are telling that boss, at the time of becoming a member, you are not giving any money to the company. But when the company will go into winding up, at that time, beta, your liability will be limited up to the guarantee given. Example, I told now 1 lakh. So maybe beta, the liability of company, outstanding liability is 1 lakh crore. Your liability as a member is limited only up to 1 lakh. And this money can be called from you only during winding up. Am I clear with this thing? Okay. Limited up to guarantee, liability is limited up to the guarantee given to contribute towards the assets of company during winding up. Example is Bhupa Life Insurance Company Limited, Cricket Australia, all these companies. Very few companies are there. What happened? Okay. Great. Yeah, Daivik, wait, I'll let you know. Don't worry. Okay. Now, unlimited company. What do you mean by, sir, unlimited company? Simple, section 2 clause 92. It is a company where there is no limit on the liability of members, no limit. Okay, they will be liable to the full extent of the liability of the company. Okay, so it's such kind of company. Like I'll give you example. Section 2 clause 22 and 2 clause 21. See, 2 clause 22 means it's a company limited by shares. Okay, so if you want to be a member, you have to buy the shares, and your liability will be limited up to the unpaid face value of shares. Company limited by guarantee, you don't have to buy any shares. The company generally don't issue share. You just have to sign a memorandum of understanding with the company that, boss, I'm giving a guarantee of 1 lakh rupees. Okay, when the company will go into winding up, at that time only you can call this money. Okay, and my liability will be limited only up to 1 lakh. That also during winding up. Did you understand the difference? Company limited by shares, because this 4 rupees company can call anytime from you. Okay, did you understand? Okay. Okay. Can a company be both limited by shares and guarantee? Yes, there are company limited by guarantee having share capital. Company limited by shares and guarantee you cannot have. There are company limited by guarantee having share capital also. So basically here, in case there is a company limited by guarantee having share capital, like Bhupa Life Insurance Company is like that. So basically when this company was inviting membership, they told that if you want to be a member, you have to give guarantee of 5 lakh and buy shares of 20,000 rupees. So both the conditions have to be fulfilled then. Understood? There are guarantee companies not having share capital which don't issue any shares. Guarantee company having share capital which also issues share, but the share value will be less, guarantee amount will be more. Okay, like that. Now, sir, unlimited companies example, I'll tell you. Discovery Communications, you know, Discovery Channel. So basically name of the company is Discovery Communications, private company with unlimited liability. Okay. Then Reebok India, Reebok India, private company with unlimited liability. So these are unlimited liability companies. Am I clear? They were formed as unlimited liability company. But sir, one point is there. But members are not, sir, why these companies were formed and all. So basically that in the general lecture we do, not in the crash course obviously. But members are not directly liable to creditors but to the company. Okay, now what is this? See, example, I am a partner of a partnership firm. So me and the firm are same person or different person in the eyes of law? Answer is same person, because partnership firm doesn't have separate legal identity, correct? The same person in the eyes of law. So any debt of the firm is my debt. Tomorrow if the firm fails to pay the debt, creditor can directly sue me. I am directly liable to the creditor. But if I am a member of an unlimited liability company, me and the company are same person or different person? Different person. So company's debt is not my debt. So creditor can sue the company. Company will issue a notice to me. Yes, sir, your liability is unlimited. You have to pay this much. So my liability is towards whom? Better to the company, not directly to the creditor. That is that point. I hope I am clear with this. Okay. Now, sir, second point is classification of company on the basis of members, which is important, guys, which is important. See, what is this? Sir, how many members there can be? Who can be members? On that basis we are classifying companies. So first is private company, second is public company. Private company, public company. Now let's understand what do you mean by public company first. Public company, okay, very simple. Don't, many people have in this mind public means government company, nothing like that. Very simple, okay. Lawmakers are very kind to you. Public company means a company other than private company. So any company other than private company, which is not a private company, is a public company. Am I clear with this thing? Understood? Okay. Now, sir, what is private company then? Section 2 plus 6 state. Sir, public means which is not private. Private means which is not public. Not like that, dumbos. Okay. Private company means a company which must have 3 restrictions in the articles of association. 3 restrictions. But any one restriction is missing, that company becomes a public company. So public company means a company other than private company, actually means a company which does not have all the 3 restrictions in the articles of association. Am I clear? So please make a point, very important definition. 3 restrictions are there in the articles of association, private company. Not there, public company. So which are the 3 restrictions? See. First, a company, private company means a company which by its AUA restricts transfer of shares. Sir, in company shares are there, correct? Shares are there. So shares can be sold. Yes. Which company shares can be sold? Answer, private companies are no, beta. Public companies, no sir. In both, shares in both the companies or shares of both the companies beta can be sold. But in public company beta, the shares are freely transferable. Like public companies which you people know are listed companies. Okay, so you can buy and sell share through your mobile only, Grow apps, Zerodha and all, freely transferable. But sir, private company shares also can also be sold. Because see, if I buy shares, it's an investment for me. If I can't sell my investments, will I buy it? No. Understood? So basically, sir, private company means which company beta? It means it's a company which has 3 restrictions. First is restriction on transfer of share. Private companies shares can also be sold, but subject to restrictions in the one. Now what restriction? Not prohibition, restrictions. What is restriction? Like example, it may be written in the AWA that if I as a member am selling the shares of a private company, I have to offer it to the directors. Directors will buy it. Okay, in case directors don't buy it, then I can sell it to outsider. So that is a restriction. Am I clear with this thing? Understood? But can there be prohibition? Because there is a section 44, which tells beta, shares and debentures are movable properties. Okay? So obviously it can be purchased and sold of private company also. Next, sir, private company means a company which by its other than OPC. Forget that. I'll tell you what is that. Restricts number of members to 200. Yes, maximum number of members in a private company can be 200. But beta, when you say this 200, now when you count to 200, at that time some adjustments are done. What are that adjustments? First beta, joint shareholders are counted single. That means beta, take people who buy the shares jointly. Example A, B. A and B purchase shares jointly. And there are other members C, D, E. So basically while counting the member, A and B will be counted as 1. In public company, they will be counted as 2 separate people. Am I clear with this thing? Just for the purpose of counting. Okay, am I clear with this thing? Understood? If you ask, sir, is B a member and A and member? Yes, both are members. Just for the counting purpose, better they'll be counted as single. Clear? Next, present and past employees are excluded. Sir, what do you mean by present and past employees are excluded? Let's understand what does it mean. Sir, example, sir, are employees members? First thing, answer is no, Ray. Employees are not members. Then sir, obviously sir, then employees are not members, so in both the companies, public, private, they should be excluded, correct? But beta, sometimes employees are rewarded through shares from the company or by the company, okay, in the form of employee stock option, sweat equity shares. They are rewarded through shares. So at that time, beta, example, I am the employee of the company, I get shares. I am a private company's employee. I get shares as sweat equity shares or as a ESOP option. So in that case, beta, okay, will I be shareholder? Yes. Will I be member? Yes. Will I get all the rights of member? Yes. Can I vote? Yes. Can I go in the meeting? Yes. Can I have food in the meeting? Yes. But will I be counted in the 200? No. Only for counting purpose I will not be counted. Next, past employee. Now what is past employee? Okay. Yes. Obviously, I'll send it. What is past employee? Past employee means, example, as an employee took the shares as sweat equity or ESOP, but after 10 years I retired. After retiring, I still have the shares. Will I be the employee of the company? No, I'm ex-employee, past employee. But will I be shareholder? Yes. Will I be member? Yes. But will I be counted in the 200? Answer is no. Ille. Am I clear with this thing? Okay. Next, prohibits, third restriction. In fact, this is not restriction, this is prohibition. Prohibits invitation to public to subscribe its securities. A private company cannot invite the public, come, buy my shares, buy my securities. No, not allowed. Sir, that's the reason. So indirectly, you might have heard about IPO. Okay, public issue. Can a private company do IPO? No. Am I clear? The reason is that beta, a private company prohibits the company, okay, to do IPO, to invite the public to subscribe securities. That's the reason beta, the shares which are listed on the stock exchange, the companies which are listed on the stock exchange, they have already done IPO. So they are public companies or private company? Public companies. Am I clear with this thing? Understood? Okay, great. So these three restrictions are there. It is a private company. Any one restriction missing, it is a public company. Okay. Now let's understand. So there are two questions which I have given. Okay. If you think it is true, just give me a thumbs up. If you think it is false, give me a thumbs down. Simple. Priya Industries Private Limited can have 201 debenture holders up till now. Yes? True or false? What do you think? True or false? Answer is true. Obviously, the reason is that, boss, debenture holders are not members. Clear? Limit is on members. Similarly, the company can issue 201 equity shares as well. True or false? Answer is true, because the limit is on the number of members, not on the number of shares to be issued. Okay, great. The answer is true. Taru. Next, Priya Industries Private Limited can make public issue of debentures, but not shares. True or false? True or false? Answer is false. The company, private company, cannot make public issue of any securities. See, it prohibits invitation to public to subscribe securities. Not even shares. Securities means shares, debentures, everything. So it's not like they cannot make public issue of shares, but of debentures. No, they cannot make of anything. Answer is false. Okay, understood? Great, great. Yes. Okay. Now, I'll open one sheet for you. Okay. Now, guys, understand. Until Companies Act 1956, there was only public company and private company. There was no further bifurcation. No further bifurcation was there. But now, private companies have been further bifurcated as small company, 1% company. What beta? Small company and 1% company. Now, sir, why? What is the purpose of bifurcation? Was fair play. Okay. In crash course, I don't have to tell all this thing, but I'm telling you. Now, what is the purpose? Fair play. Like example, can you make Usain Bolt run with a 5-year-old kid? No, he will win. Can you make Usain Bolt run with me? No, obviously not. He will lose. Okay, he will win. Okay, obviously. Okay, that is fair play. So just tell me, there is a company, Reliance Industries Limited, lakhs of crores, like 20 lakh crores. Okay, more than that, turnover of more than that. Example, I'm telling 20 lakh crore minimum. And there is a company, Harsh Industries Private Limited. Okay, 20 lakh rupees turnover. Tell me, rules and regulations applicable, okay, for both the company should be same, or one company should get exemption? Obviously, this company should get exemption, because Reliance can always appoint a chartered accountant and give him 50 lakhs ka pay package and tell do the compliances. Can Harsh do? 20 lakh though is our their turnover. CS salary will be carried forward every year. CA will be the biggest creditor, the employee will be the biggest creditor of the company. Obviously not. That's the reason, for the purpose of granting exemptions. Okay, private and public companies have been private companies have been further classified as small company and 1% company. Now, which exemptions they get? Many exemptions are like, I'll take one or two. Like normal company, all companies have to prepare financial statement. These companies also have to prepare. But beta, in case there is a company which is a small company or a private company, their financial statement, okay, may not include cash flow statement. Generally, what is financial statement? P&L, balance sheet, notes to account, statement of changes in equity, cash flow statement. Small company and OPC don't have to prepare cash flow statement. One exemption. Time is saved. Second, better, normal companies have to take 4 board meetings in a year. These companies have to take only 2 board meetings. If there is a 1% company, okay, and he is the member and he is the director, there is only one director. Okay, so why board meeting also? Simple like that. So many exemptions are there. Now we will understand, sir, what is a small company? So like this much small ground floor which doesn't have first floor office. No, small doesn't mean in size. Small means small in terms of paid up capital and turnover. We'll see, understand what is OPC and what is small company. Let's understand. Again. In the lecture, okay, like 3-4 questions or will be solving like of a particular topic, not more than that, obviously, because it's a crash course. Yeah. So, see. What is small company? Let's understand. Guys, small company means what? Small company, okay, first, under section 2 clause 85, it means a company with a paid up capital up to 4 crore. Up to 4 crore. As per 31st March, year ending. Okay, and turnover up to 40 crore as per 31st March. So if I am a company, private company with a paid up capital of up to 4 crore, not more than that, and turnover up to 40 crore, not more than that, then I am a small company. But sir, here students get confused because the definition is written in a very different way. Small company means a company with a paid up capital up to 4 crore, which may be increased up to 10 crore, which is mentioned in the rules also. turnover 40 crore, which may be increased up to 100 crore. So sir, currently what is the limit? 4, 40 or 10 and 100? There is beta 4 and 40. What is this 10 and 100? MCA, Ministry of Corporate Affairs, that is government. If they want to increase this 4 to 10, 40 to 100 because of inflation, so they may by notification do it. But if they want to go beyond 10 and 100, they can't do it. Then better that can be amended in the parliament only. Am I clear? That is the meaning of that. Okay, like for your reference, up till 2022, okay, September 2022, this 4 and 40 was 2 and 20. They changed it, okay, by notification. But sir, in case you come under any of these entities, you mean under any of these entities, if you are any of this, then beta you will not be called as a small company. Even though you are a company and you are within the limits, you will not be called as a small company. Sir, which? Holding and subsidiary company. You know what is holding and subsidiary company. Anyways, the next thing I'll tell you, just for your understanding, just for rough understanding. A limited, B limited. A limited holds majority of shares in B limited. So A is the holding, B is the subsidiary. So if you are the holding company or subsidiary, papa or bacha of any company, okay, then you cannot be called a small company. So that means for being called a small company and getting exemption, you should be an orphan, you should not have family. Am I clear with this? Next, Section 8 company, non-profit company, companies formed not for profit. Okay, cannot be a small company because Section 8 company gets a lot of exemption under Section 8. Oh, why you want this? Am I clear? Next, company regulated under a different act. What is company regulated under a different act? Example, ICICI Bank. Is it a company? Yes sir, it's a company. Why? Because it is formed under Companies Act 1956. But it is regulated under Banking Regulation Act. Am I clear with this thing? Understood properly? Okay, so this is a company formed under Companies Act but regulated under Banking Regulation Act. So basically it is regulated under a different act. So it will not be called a small company. Okay, why you want exemptions under Companies Act? Array, the whole Companies Act is exempted for you. You fall under a different act. One more, Reliance Energy Limited, a company formed under Companies Act but regulated under Electricity Supply Act 2003. So it will also not be a small company. Am I clear? Good. Now, so if you come under A, B, C, you will not be a small company. Simple. So guys, you tell me whether it's a small company or not. Quickly. Mini Industries Limited, paid up capital 3 crore, turnover 39 crore. Is it a small company? Yes or no? Yes, answer is no, Ray. You know why? Because a Mini Industries Limited, it's a public company. है ना? Limited. Small company is a type of private company. Understood? Okay. Yeah. Now, I hope you understood small company. Now we'll see what is one person company. Pay attention. Na? One person company, section 2 clause 62. Sir, one person company means a company formed under Companies Act with only one person as member. Okay. Now people will think it's a sole proprietorship. It is not a sole proprietorship. Sole proprietor, yes, I accept here there is only one person as member, but the company and the member are different persons in the eyes of law. It's a company, so it will have already all the features of company. Okay, it's a type of private company. So it will have all the features of that, except one situation, but a minimum number of members in a private company to maximum 200. Here minimum maximum number of member 1. Sole proprietor and sole proprietorship form are same person in the eyes of law, unlike this company. Am I clear with this thing? Understood? Okay. Now, so sir, I hope you understood what is one person company. Okay. It also has a lot of exemptions under Companies Act. But guys, there are certain important points under one person company which I want you to know. Okay. From here, questions are asked. Almost every alternate attempt. You have to expect questions from here. Let's understand the important points. First point. Tell me guys, if I form a OPC, I'm the sole member. If I die, will the company die? No. Separate legal entity. But if I die, okay, will there be okay, an instability in the company? Answer is yes, because the sole member is not there. That's the reason, okay, it is mandatory that if I form a OPC, one person company, okay, I have to appoint a nominee who should be having capacity to contract, okay, and that nominee should give a consent that in case, okay, I die or I cannot act as a member, that nominee will become the member. Am I clear with this thing? Understood properly? Okay, so see, the member of OPC has to appoint a nominee who shall give his consent to be the member. Okay, consent letter is in INC 3 format. In case the member dies or cannot act as a member of the OPC. Clear? Good. Achha, sir, apart from being capable, apart from having capacity to contract, that to be understood. Capacity to contract means he should be a major, he should not be of unsound mind, he should be of sound mind, and he should not be disqualified by law. Apart from that, does Companies Act give any criteria to be a member or a nominee? Answer is yes. There are 3 criteria given. Now, what are the criteria? Understand, see. In order to be a member or a nominee of member of OPC, first the member should be an individual. So, no artificial person, no body corporate can become member of a OPC. Second, he should be citizen of India. And third one point was there, he should be resident of India. I am telling there was a point, because now this is not required. This point has been removed. But how it is removed, people don't understand it properly. What is written? He should be an individual plus citizen of India plus resident of India or otherwise. Now, what do you mean by or otherwise? That means, beta, see, what do you mean by resident of India? A person who had stayed in India in the preceding financial year for 182 days or more. But it is written, but now it is not required. You don't need to be resident of India. But, okay, in order to be a member, okay, or nominee, you should have stayed in the preceding financial year for 120 days. So, resident is not required. But yes, staying in the preceding financial year in India for 120 days is required. Many people think a resident of India definition has changed. No, definition is still there, the 182 days. But it is written that, boss, you can be a member, you can be a nominee without being a resident of India. But yes, you should have stayed in the preceding year for at least 120 days. Am I clear with this? If you understood, give me a thumbs up quickly. You understood this point. Great. Good. Now, a person can be a member in only one OPC. Very important. Sir, I can be member in how many normal companies? No limit. I can be member in n number of companies. But sir, I can be a member in how many OPCs at a point of time? Answer is, I can be a member in only one OPC at a point of time. Similarly, I can be nominee also in only one OPC. Okay, like example, there is A OPC and B OPC. Can I be member in A OPC and member in B OPC? No. Can I be nominee in A OPC and B OPC? No, not allowed. But can I be member in A OPC and nominee in B OPC? Answer is yes. Like, this is just for understanding. Okay. This is Mr. Horn, that guy, not Harsha. He was a member in AOPC and his girlfriend was the nominee. Okay. In BOPC, his girlfriend was the member and he is the nominee. Is it okay? Yes. But now people ask, so in case his girlfriend dies, then he'll become member in BOPC also. That is the situation. So now he's in BOPC also. 2 OPCs is a member. That is not allowed. But this is exceptional case, no? So for that, exceptional provision is also there. What is that exceptional provision? However, a person can act as member in 2 OPCs for a period of 180 days. Period of how many days, beta? 180 days. That means in 180 days, beta, I have 3 options. First, I can dissolve one OPC. Second, I can merge the OPCs. Third, if I decide I want to be a member here only. Sorry, I want to be a member here. So what I'll do? I have to appoint a new member, just for understand. I means Mr. Horn. He will appoint his new girlfriend as the member. Okay. And he'll become nominee again. Is it okay or not? Yes. Simple. Achha, if this girl also dies. Okay. Then, because this kind of question student ask me, this girlfriend also dies. Then beta, another girlfriend, another member, sorry, not girlfriend. Okay. Within 180 days. Am I clear with this thing? Understood? Because this question students ask me. Okay. So, one student asked me, like I was teaching, so he told me, like I was teaching one concept of nomination. Like in case I have a shareholder, I can appoint somebody else as a nominee for my share, normal companies. But I can change my nominee. So I was giving an example that in case I become a member, I kept my wife as nominee. So in case, but after some time, I was getting a feeling that somebody is trying to kill me. Okay, in my home drums and all came. I hope you understood. So can I change my nominee? Yes, I can change I can make my child as nominee. So he's asking me, sir, if your child also tries to kill you. I told him, I can keep my father as nominee. If your father also tries to kill you, mother as nominee. Sir, if your mother also tries to kill you, so I told then it is better I should die only if I have this kind of relatives. Yes or no? Simple. Okay. Now, so see, fourth point is done. Now, fifth point. Sir, can a minor be a member in a OPC? Answer is no. Minor cannot be a member in a OPC as well as he cannot be beneficial owner of shares. Now, what happens generally in normal companies, what we can do, apart from OPC, that guardian or parent will be the shareholder, registered shareholder, but beneficial owner is minor. He'll get the dividend and all. Okay. But in OPC, beta, minor cannot be a guardian, minor cannot be a shareholder also, member also, and neither a beneficial owner. Okay. Next, OPC cannot be formed as a Section 8 company. Why, sir? Same reason. Section 8 company beta gets lot of exemptions under Section 8. Section 2 clause 62 gives exemptions to OPC. You cannot take both the exemptions. Next, even you cannot convert OPC to Section 8, Section 8 to OPC. Okay. Next, OPC cannot be formed as a company carrying on the business of non-banking financial investment activities. Indirectly, in short, OPC cannot be an investment company. What do you mean by investment company? Like mutual fund whose business is to invest in other company shares and securities. Why, sir? Many reasons are there. I'll give you a very simple reason. If you want to form an investment company, it should be a public company. OPC is which type of company? Private company. So obviously it cannot be. Am I clear with this thing? Understood? Clear? Great. I'll have one question. Okay, I'm giving you 2 minutes to solve. You all should solve that question. It's a good question. Okay, on OPC. Okay, students can give the answers. You have to give the answer. Okay, so this is the question. Just let me check. Many people are online. Okay. Ravi is the owner of a grocery store. In March 18, he got the idea of forming a OPC and convinced his sister Ruchika, an Indian citizen who resides in London but visits India from time to time to become a nominee in his OPC. Okay. In the year 2017, Ruchika first came to India on 10th January and left for London on 26th February. Thereafter, she again visited India on 7th June and remained here till 10th October and boarded an evening flight on the same day. From then onwards, she did not visit India in the year 2017, but on 2nd January 2018, she came to India and left for London on 14th February. Okay. Is it possible? Is it possible? It possible for Ravi to appoint Ruchika as nominee? Yes or no? You have to do calculation of 120 days. Okay. Yes or no? Yes. Yes. Take a minute and solve. So, I'll tell you the answer. She cannot be a nominee. Sir, why sir? She stayed for more than 120. No, re beta. You did not read the question maybe. In March 18, he got the idea of forming company. So in March 18 means in which year financial year company is formed? 17-18. It starts from 1st April 17 till 31st March 18. So we have to consider her stay in the preceding financial year 16-17. Starts from 1st April 16 and ends on 31st March 17. You have to consider Ruchika's stay in this period. In this period, tell me, she came on which day? 10 January 2017 and left for London on 26 February 2017. So basically 48 days, both days included. Then she came in on 7 June 2017. Because 7 June 2017 falls in this financial year. So her stay after that has to be ignored. So she cannot be a nominee. Am I clear? Yes. Okay, sir. Understood. Okay. Good. So, great. Okay. Now the next point, control. Classification of company on the basis of control. After this, we'll take 5 minutes break. After 1 hour 15 minutes odd, we will take 5 minutes break. And after 3 hours, we'll take half an hour break. Okay. So, see. Classification of company on the basis of control. One company controlling another company. On that basis, we are classifying companies. Okay. So see, what is written? No. On the basis of control. One company controlling another company, on that basis we are classifying. So here there are 3 companies: holding company, subsidiary company, associate company. Holding, subsidiary, associate. Papa, bacha, brother, sister, siblings. Papa, bacha and siblings. Now actually this relation is there. I'll prove you also why. See. Holding company, section 2 clause 42. What do you mean by holding company? Understand. Holding company means a company which has subsidiaries. Means it is a company which has subsidiaries, and in relation to those subsidiaries, it is the holding company. Like, when can I be a papa? Only when I have bachas. Without bachas, can I be papa? No, obviously not. Am I clear at this thing? And in relation to the bachas, I am the papa. Simple. That is holding company. Holding. Okay, which holds the subsidiaries. A company which has subsidiaries, like Tata Sons Private Limited, if you have heard this company's name. It is the holding company of the whole Tata group, like that. Okay. Now subsidiary company. What is subsidiary company? See, section 2 clause 87. It tells beta one company can become subsidiary of another company by 3 ways. There are 3 methods of becoming bacha. Okay, which are the 3 methods? See, subsidiary company means a company in which another company controls the composition of board of directors. Sir, A limited, B limited. If A limited controls the composition of board of directors of B, A is the holding and B is the subsidiary. But sir, what do you mean by controlling the composition of board of directors? Let's understand. Controlling composition of board of directors means power to appoint as well as remove majority of director. For example, B limited has 10 directors on the board. If A limited has the power to appoint as well as remove 6 or more director, majority, then A limited controls the composition of board of directors of B. A is the holding, B is the subsidiary. Am I clear with this? Understood? First method. Method 2. Subsidiary company means a company which holds together with its, means a company in which another company holds together with its subsidiaries more than 1/2 of the voting rights. Now understand beta, in the question they will either give voting rights or they will either give equity share. 1 equity share is equal to 1 vote generally. Am I clear? So that calculation you have to do. For example, A limited and B limited is there. Example, B limited has issued 1000 shares to the members. Indirectly 1000 vote, 1 share, 1 vote. Equity share only, not preference. Preference you have to ignore. And A Limited holds 501 shares, majority, not 51. 501 shares, indirectly 501 votes. So A Limited is the holding company, B Limited is the subsidiary company. Understood properly? Clear? Yes? Okay. C is very simple. A subsidiary company of another subsidiary is also the subsidiary. That means my subsidiary is also my subsidiary. A Limited is the holding company, B Limited is the subsidiary. B is the holding of C. So can I say A is the holding of C or not? Answer is yes. C Limited is the subsidiary of A Limited. It is like my baby's baby is my baby. One more example. I bow down to my father. My father bows down to his father. Won't I bow down to grandfather? Yes. Is the ultimate papa. Am I clear? That is the point. Okay. Chal. I am giving you one question. Okay. You answer this question. Everyone. A Limited holds 35% voting rights in B Limited. Indirectly equity shares. A Limited holds 70% voting rights in C Limited. C Limited holds 17% voting rights in B Limited. Is B Limited a subsidiary of A Limited? Yes or no? Yes or no? Thumbs up or thumbs down? Quickly answer. Everyone can answer. Yes. Yes. Thumbs up. No. Thumbs down. Yes. Answer is yes. Yes. But my question is by which method? Method A, B or C? A, B or C? Answer is method B. Now many people have method C. Why method C will not come? I'll tell you. See. Method C, when will it come? Na? A is the holding of C, which is there. C is the holding of B. Then A will be the holding of B. Is C holding of B? No. That's the reason method C. Sorry, method C, yes. Method C will not come. Why method B will come? A Limited holds together with its subsidiaries. A's subsidiary is C. A is holding 35 in B. C is holding 70 in B. So A along with its subsidiary is holding 52, majority of votes. Basically, okay, B. A is the holding of B. Understood? Okay. Sir, understood. Very good, very good. Now, associate company, section 2, clause 6, siblings. Huh? What is associate company? If one company holds significant influence over another company. One company has significant influence over another. A has significant influence over B. Both are associates. Significant influence means what? A cannot take decision on behalf of B, but A can significantly affect the decision making of B. Then beta A and B both are siblings, associates of each other. Like your parents will take decision on B on your behalf. They are holding your subsidiary. But your siblings cannot take decision on your behalf, but they can affect your decision. Their advice would affect your decision. So you both are associates of each other. So that is general understanding. We understood. But sir, what is the meaning of significant influence? See, is it quantified? Yes, it is quantified. How it is quantified? See, significant influence means one company holds 20% or more, but not more than 50%. Because why not more than 50%? Then better holding subsidiary will be there. 20% or more, but not more than 50% of voting rights in another company. Paid up share capital in another company. Beta, here paid up share capital considers equity and convertible preference shares. Huh? Both. Equity plus convertible preference shares. Okay. And or interest in other company. For example, there is X and Y. If X Limited holds 20% or more of voting rights or paid up share capital or interest. Interest means, one example I'll give you. Whatever Y will earn, 20% or more of that will go to X. Okay, whatever loss will be, that 20% or more will go to X, but not more than 50%. Okay, that is interest. So X, I'm giving a general example. Huh? Okay, in interest there are many examples. Okay, but now I'm not taking it. So basically, okay, X and Y both are associates of each other. Clear, everyone? Yes. Yeah. Associate company example I'll give you. Reliance Industries and Balaji Telefilms, because these are the companies, famous companies you know, recently. So basically, there was a purchase of shares. Reliance Industries Limited holds 25% of shares of Balaji Telefilms, around worth around 400 to 500 crores worth. So basically, both are associates of each other. Am I clear with this thing? Understood? I hope you understood holding, subsidiary, and associate companies. Simple? Yes? Okay. If you understood, give me a thumbs up quickly. Great. Great. We'll take a fun 5 minutes break and then we will come back. 2 to 5 minutes break. 2 to 5 minutes break just for your rest. people who are watching on YouTube and have raised some questions, so don't worry, I will answer the questions. You can put your questions. I'll answer the question once the session gets over, immediately. Okay. Okay. Now, so we have completed this part. Now let's start. Let's continue, not start. Now, beta, classification of company on the basis of capital we are doing. Now here there are two companies, listed companies, unlisted companies. Now first we'll do the simple part, unlisted company. Unlisted company means a company other than listed company. सर बहुत ही टफ था ना. Any company which is not listed on the stock exchange. Okay, that is an unlisted company. Now what is listed company? Now actually I'll tell you, I'll give a disclaimer. Listed company's definition is actually very technical. But as of foundation point of view is concerned, ICAI has given only one line. The simpler part they have given, the technical part they have not included. Listed company means a company which has any of its securities listed on recognized stock exchange. So if my company, take a Harsh Limited, but has any of its securities listed on recognized stock exchange, it is a listed company. But what is written? But certain classes of companies are excluded. That means beta, there are certain companies, okay, public companies in India which have listed their securities on stock exchange, but they will not be covered under listed companies definition. Which are these? Beta is in inter, CA inter. Foundation level, very simple they have given. Am I clear with this? So listed means any company which has any of its securities listed on the stock exchange, but yes, exceptions are there. Okay, unlisted means a company which doesn't have its securities listed on stock exchange. Simple. Okay, talking in BSE and NSE. Okay, that part is done. Now other companies. Now people think other companies is not that important. No, other companies are important. In other companies, beta, there are 6 set of companies which you have: government company, foreign company, government company, Section 8 company, Nidhi company, and public financial institution. Okay, so let's understand one by one. What is this? Once we finish this, classification of company will be completed. The bigger part will be completed. Now, government company, Section 2, Clause 45. Sir, what do you mean by government company? Government company means a company in which 51%, here majority is not there, in which 51% or more of the paid up share capital is held by government. It's a company formed under Companies Act, okay, in which 51% or more of the paid up share capital is held by government. Which government, sir? Central government or state government or both, it doesn't matter. Okay, that is a government company. Sir, in paid up share capital, equity share capital plus convertible preference share capital both should be included. Equity share and convertible preference share. Convertible preference share means which will be converted into equity shares. Both have to be included. Am I clear with this? Okay. Sir, example BHEL, BHEL, not that BHEL, Steel Authority of India Limited. All these are beta government companies. Okay. Sir, police department is a government company? No, it is not a company formed under Companies Act. Am I clear? Okay. Now, foreign company. Okay. Section 2, Clause 42. What is a foreign company, beta? Foreign company means a company, beta, which fulfills 3 conditions. Okay. If your company fulfills 3 conditions, your company is a foreign company. Now, why are we studying foreign company? Because beta, foreign companies come in India. That is the first condition. It should have place of business in India. So they have place of business in India. They use Indian resources, make profits, take the profit to their home country. Should they follow Indian law or not? Yes, obviously yes. Okay, that is the reason, beta, in order to make beta Indian law applicable to those companies, okay, definition of foreign company is given under Companies Act. So what is the definition of foreign company? See, foreign company means a company incorporated outside India. Incorporated outside India, which has a place of business in India, whether by itself. Example, Apple. They have their own outlets. They have their own company also here, Apple India Private Limited. It's their own. Okay, they have their place of business by their own self. Next, or through agents. Now, what is agents? Let's take an example. Have you heard about Walmart? Okay, one of the biggest revenue making company in the world, incorporated outside India. Initially, they did not have any place of business in India as such. Now also Walmart is like DMart. Now also you don't have that physical DMart kind of place of business. But beta, they have their agents place of business. Who are their agent? Beta, Flipkart. 81% of the shares of Flipkart are held by Walmart. It is doing business activities in India. It is a foreign company. Next, carries on or through electronic mode. Now what do you mean by electronic mode? This is interesting. Like beta, Alibaba. Alibaba doesn't have physical place of business their own. They don't have their agents in India. But Alibaba has a website, yes. And is that website accessible from India or not? Yes. So that website will be considered as a place of business in India, and it will be obviously through that website it is doing business activities. Am I clear? One more example. Do you know OpenAI? Your favorite friend nowadays. Na? OpenAI. ChatGPT's company's name is OpenAI. Is it a foreign company? As per Companies Act definition. There is a big story, Anish, why Walmart did not come in Indian market. Answer: two political parties were responsible. We'll not go in that. Okay, now, so basically OpenAI, ChatGPT. So OpenAI, is it a foreign company? Yes, incorporated outside India, as a place of business in India, but a ChatGPT, that app, is accessible from India. That app will be considered as a place of business in India. And obviously it is carrying on business activities in India, because if you have an app, if you have a website, okay, you have a game which you have made from outside India, that gaming company's game is accessible from India. It is doing business activities. Am I clear? So actually 3 conditions are fulfilled, beta. But if you have place of business through electronic mode, basically the third condition becomes or. Because beta, that if you have incorporated outside India but have a place of business in India through electronic mode, that's it, you are a foreign company. Because it is assumed that through that place of business, through that website, through that app, you are doing business activities in India. Am I clear with this? That is a foreign company. Okay, good. Okay, now dormant company, section 455. Sir, what is dormant company? Now understand this thing properly. Dormant means beta inactive. So if I say dormant company means inactive company, will it be correct or it will be wrong? Answer: it will not be entirely correct, entirely wrong. Absolutely correct and absolutely wrong. The reason is that, see, what is a dormant company? First we'll read what is written. A company formed for a future project or for holding intellectual property with no significant accounting transaction. What is the meaning of significant accounting transaction? You know, okay? Operational income. Okay. So example, I form a company. Okay, like example, I'll give you example. See, if I form a company and it is into making a car, I have registered my patent and all in the name of the car. But I formed a company for holding intellectual property, and I have taken orders from, okay, I'm going to Shark Tank and all. I'm taking orders, okay, I have already got orders from 5-6 companies to make this car and basically sell to them. Okay, so basically for future project also. But currently beta, I do not have any business income. You know why? Because first financiers will provide me finance. Okay, like 100 crore, 200 crores will be required for me. Then I'll start of manufacturing the cars. Okay, then basically the clients will give me some token after seeing my car, one car I made, okay, model car. Then beta, okay, I'll get a money and all, okay, token money, okay, then basically advances, everything. But until that, okay, until that beta, what should I do? Can I do any business? No. I'm active or inactive? I'm inactive. I have just, okay, registered my patent, okay, taken orders, okay, but I'm not doing any business operation because I'm waiting for finance. Now such kind of companies, na, inactive companies, if you are just an inactive company, ROC, Register of Companies, will issue a notice to you because they don't know this thing. So they'll issue a notice to you and they'll tell you that, boss, we think you are inactive. So basically either prove us that you are active by doing filing of balance sheet, P&L and all, because inactive companies will not do. Or else, okay, prove me that you are temporarily inactive. Okay, like the case I told. If you don't prove either of the things, then beta your name will be striked off from the register, direct winding up. So whenever beta your company is temporarily inactive, like in my case situation, okay, I'm waiting for the finance, I will inform ROC that, boss, I'm inactive temporarily. ROC will give me the status of dormant for a period up to 5 years. That means beta now, okay, for a period up to 5 years, if I don't do any business, it's fine. After 5 years, if I don't do business, okay, then the problem will start. Then beta, they may strike my name. Okay, so basically as per your model it is written, okay, that said in case you don't do business for 2 years, so basically you are treated as inactive by ROC. So you have to apply to ROC that, boss, okay, please give me the status of dormant, and then beta they will not strike your name, or else they will strike your name from the register. Am I clear? That is the meaning of dormant company. So in the books it is written, see, if these all things happen, do you have significant accounting transactions? Answer is no. First one, okay, if you are basically example paying audit fees, is it operational income? No, it's not significant accounting transaction. Okay, you beta did allotment of shares and got income. So is it better significant accounting transaction? No, because obviously it is not operational income. You are just issuing shares. You went to Shark Tank and basically got 1% equity. That is not significant accounting transaction. Then basically you are making payment for maintaining registers and records of company. Is it significant accounting transaction? Answer is no. Am I clear? So all these are not significant accounting transaction. Significant accounting transaction means operational income. Simple as that. Am I clear? So dormant is not directly a company. Dormant is a status which an inactive company has to take. Okay, good. Now let's understand what is Section 8 company. Very, very important. Probability is high, probability is there that, boss, that can be asked to for you in the examination. Okay, so we'll understand what is a Section 8 company. Please pay attention. Okay, so I will ask you one question. Okay, so you people, YouTube people also can answer. Okay, it's a very simple question, but answer nobody gives me properly. See, Section 8 company means what, beta? Association formed not for profit, simple. Or association formed for charitable objects. People say NPO, don't write NPO in the exam, you will get 0 mark. NPO is a big word, non-profit organization. In that Section 8 companies come, trust come, okay, NGOs will come. So don't use the word NPO in your answer. Okay, these are small things which I am telling you. When you write NPOs and all, at that time the person understands that, boss, he doesn't have any clear idea of what he studied. Section 8 company is a kind of NPO. NPO is a bigger word. It's a company formed under Companies Act. Formed, but the purpose is not to earn profit, to do charitable objects. Okay. Now, I have one question. Sir, Section 8 company is a company formed not for profits, for doing charitable objects. Now, what charitable objects? For social welfare, promotion of arts, commerce, science, okay, sports development, environment protection, all these things. Okay. My question is, sir, if I want to do charity, why would I form a company I would form a trust or an NGO. Yes, no? It's better na, less compliances than a company. Why would I form a company better? Simple logic, na? I'll tell the answer, logic behind that. See, I don't have to tell all this thing in crash course, but it's important that some basic things you need to know. See, understand. Point is, what people think a Section 8 company runs on donations, subscriptions and all. No. If my purpose is to run on donations and subscription, I want to beg money from others and then give donation, then do charity. So I'll form an NGO, I'll form a trust. My purpose is not to beg money. My purpose is to earn money. Okay, not for my purpose, not for myself, but for providing charity and all. I want to earn money, and money can be earned by doing business. And it's only company form of entity that can do business. Okay, on larger scale. That is the reason but I'll form a company. Like I'll give you an example of Section 8 company. Okay, have you heard about Rolex watches? So Rolex is a association company form not for profits. So whatever it earns, take a 80 to 90% goes into charity. Rest 10-20% will go into research and development of watches again. Am I clear with this thing? Understood? So I form a company, I remove my directorship fees, expenses, everything, and then have a surplus. From that surplus, that surplus will be utilized for providing charity and all. Am I clear with this thing? Understood? That is the purpose. Okay. So sir, if I want to form a Section 8 company, the incorporation procedure is different compared to the normal companies. Answer is no, it is more or less the same. But if you want to function as a Section 8 company, beta, you have to obtain a license. Okay, from from ROC, and that license is issued to you under Section 8. Okay, then you are called a Section 8 company. Now the license will not be easily given to you. There are 3 pillars on the basis of which you will get license. Okay, so on a stamp paper in the form of affidavit, directors have to write these 3 things. Then only license will be given. First, the main objects of the company will be non-profit. Obviously, what business activity you are doing, that you have to mention. I told now. Promotion of arts, commerce, science, religion, environment protection, all this thing. Second, company cannot earn profits obviously, and no dividend to members. What do you mean by dividend? Distribution of profit. If you can't earn profit, how can you give dividend? Logic. Okay, then you will get the license. When you get the license, you get lot of exemptions under Companies Act, under Income Tax Act. One of the exemption is that you don't have to write these words along with the name. Limited and private limited. Why? Because Section 8 company gives you exemption under that. But your name will end with the word association, confederation, council and all. Okay, like that. Now, example, Stainless Steel Association. This is a company, actual company. Okay, but the word private limited will not come. It is doing business. Okay, Jain community doing business. Okay, 90% of that goes into charity of the surplus. Simple. Now that license will come with terms and conditions, but it will also come with benefits. The benefits will get, but you have to follow the terms and conditions. The biggest terms and conditions are the 3 pillars on the basis of which you got the license. Yes or no? Okay, sir, if you do not fulfill the terms and conditions, there is one person, regional director, is above ROC. He will take action against you. Now what is the action? First option, beta, he may cancel the license. Okay, you are not eligible for this license, you did not follow the terms and conditions. Okay, he'll cancel the license, declare you as a profit making company, take back all the exemptions and put fine on you. Second, beta, he may order winding up of the company. Okay, because you are found just for doing fraud. Okay, and whatever while winding up, he'll sell the asset, pay the debts. After paying debt, anything surplus is remaining, it will be given to a government fund called as Insolvency and Bankruptcy Fund of India. Am I clear? Third, he may order merger of this Section 8 company with another Section 8 company. But very important, beta, the RD regional director can order merger of a Section 8 company with another Section 8 company only, not with a profit making company. That cannot be done. Am I clear with this thing? Okay. Sir, you told कि RD में मैं cancel the license, ठीक है, and put a fine on punishment. So what is the punishment? ठीक है, the punishment on the company will be fined 10 lakh to 1 crore. Officers in default who did not follow the terms and conditions, fined 25,000 to 25 lakhs. Okay, plus they will be punished under section 447. Now what is punishment under 447? Jail from 7 years to 10 years because you intentionally formed the company for doing fraud. In case, that is the punishment. Sir, AUA and MOUA, Articles of Association, Memorandum of Association, cannot be altered without CG approval. What does that mean? Sir, in normal companies, beta, AUA, MOUA can be altered, okay, by members' approval, but here central government approval will be required. Sir, why? Sir, why? A very simple reason. In the object clause, in the MOA, there is object clause. You might have read all these things earlier, I know. In that, beta, what objects you might have written? Profit making or non-profit? Non-profit. And you got the exemptions. You got the license. Now, example, beta, if this point is not there, members will, by members approval, you change the object clause from non-profit to profit. You are taking exemption also, and you are taking the profits also. You are doing moe with the government. That is the reason. AUA MOUA cannot be altered without CG approval. Am I clear? Next. Sir, can a partnership firm be a member in any company? No, because it doesn't have separate legal entity. But yes, except in which company, beta? Section 8 company. Am I clear with this thing? Understood? It can be member in Section 8 company. Yes. So these were the main points of Section 8 company. Then beta, needy company. So let's understand what is needy company. See, very simple point. Needy company is very simple. Needy means what, beta? Wealth or treasure. Wealth or treasure. In South Indian languages, okay, many South Indian languages, it is called as needy. Needy means wealth or treasure. Now, needy company, beta, first thing I'll tell you, it should be a public company. Needy company, if you want to form, it should be a public company. Sir, what is the minimum number of members? Is there a minimum number of member criteria? Yes. For a needy company, the minimum number of members is 7 in a public company, but for needy, it is 200. Okay, understand this thing. Sir, what is needy company? A company formed for developing habit of savings amongst members. It gives loan and accepts deposit only from members. Very simple, I'll tell you. If these 200 people will come together and basically become a member of a needy company. Now there are two big criteria to be a member in needy company. First is, beta, you have to buy some shares. Shares is very nominal, 100 to 200 rupees you have to buy, not more than that. The major condition is that you have to contribute some money quarterly or monthly, whatever is decided. So first benefit is that, boss, your savings habit is inculcated in you. Second benefit is that, like example, there are 500 members in a needy company who will contribute money. Now, needy company has a corpus. This corpus will be utilized to give loan to member. Any member wants loan, rather than going to the bank, there is a specific amount which he can take loan from his company. Now this member, beta, will return the money along with interest. Now that interest is the profit of needy company, which will be distributed. A part of that will be distributed back to members in the form of dividend. Am I clear with this thing? So if I am paying interest, beta, a part of that will come back to me as dividend. Okay. One disadvantage is that the rate of interest in needy company is very high, 20 to 25% around. Okay, that is the point. So it's kind of a self-help, you can say. Okay, understood. Next, beta, is public financial institution. Now, public financial institution, what is it? See, last to last attempt, beta, this question came in your exam. So basically, what is public financial institution? See, beta, financial, before understanding public financial institution, you need to understand what is financial institution. Financial institution means any institution, any entity whose basic business is to provide finance. Like Muthoot Finance, Manipuram Gold, India Infoline, all these things are financial institutions. Public financial institution means what, beta? Any financial institution which is owned and regulated by government. Government regulations will be applicable. Now I'll tell you, understand, currently, now this is important. Currently, this is which act beta? Companies Act 2013. Before this it was Companies Act 1956. Beta, currently it's only central government who can declare beta any entity as a PFI by notification. But central government can declare, if they want to declare any entity as a PFI, so first beta, it should come under any of the two criteria. If it doesn't come under any of the criteria, central government cannot declare it as a PFI. First, if it is a company, it should be a government company. It should be a government company. But if it is not a company, then beta, it is written, it should be an entity formed and regulated under a separate act made only for itself. That means corporation, like LIC. LIC is formed under LIC Act, and LIC Act is applicable only for LIC, not for any other entity. So those entities are called as corporation. So currently beta, if government has to declare any entity as a PFI, it should be either government company or a corporation. Did you understand this? Yes. But in the old act, these conditions were not there. It was a free hand to central government. If they want to declare any entity as a PFI, they may declare. So that was section 4A subsection 2. This is the section which used to give power. Okay. Now in the definition, okay, this point is even now mentioned. Okay, any entity which had been declared as PFI under section 4A2, okay, which is replaced under now section 465. Okay, those entities which have been declared as PFI in the old act, they will still continue as a PFI. Understood? Am I clear? So currently, which are the PFIs and which can be declared as PFI? This is how the definition is given. The first is LIC. Next is IDFCL, Infrastructure Development Finance Company Limited. It provides a loan to infrastructure companies. Next, UTI, Unit Trust of India, oldest PFI of India, Indian government. Next, institution complying section 4A2 of Companies Act 1956. I told you, old act, and entities which had been declared as PFI in the old acts. Apart from these three. Next beta, institution declared as PFI by central government currently, as of today. But they should be either government companies or corporation. So this is the definition of PFI. Yes, somewhere you have to by heart the definition, but I told you the meaning of that. Okay. So here we have completed beta classification of companies. If you understood classification of companies properly, all the points, give me a thumbs up quickly. If you understood quickly, very good, very good. Good. So we have finished beta introduction, classification. One small part we will be doing, okay, incorporation of company. Okay. Let us start with incorporation of company. Now, okay. Thank you. So people who are on YouTube, okay, you can put the questions in the chat box. I'll definitely answer to that. Don't worry. Okay. Currently, I'm handling 3 instruments, so I'm not be able to answer now. Now, incorporation of company. Let's understand. See, this part, incorporation of company, will completely tell you about everything about incorporation. It's divided into 3 major parts. First, who forms the company? That person has been defined, beautiful definition. Second, sir, what is the procedure of incorporation? And third, one beautiful section which encompasses everything. Okay, let's see. First beta, the first thing which is defined in this part is promoter. Now if I ask you beta, who's a promoter? You will say beta, promoter means a person who forms the company. And actually beta, this was just the explanation given under an old act. Promoter was not defined also. It was just given an example. A person who has an idea of a business. For that business idea, he forms a company and runs the company. He is a promoter. But Just tell me, this is just an explanation, and wherever there is no definition, there is a lot of loopholes, and this definition actually was a big loophole. Okay, this explanation, because there is no definition, and many promoters escape promoters liability. When the new act was formed, it was told that you define anything, you don't define anything, doesn't matter, define promoter properly. Now, who is a promoter? Let's understand. But section 2 clause 69 is the section which defines promoter, and it is told that if you come under any of these points, now by default of law you are a promoter, boss. No ifs and buts, and you have to bear promoter's liability. Am I clear with this thing? Now, who is a promoter? Promoter means a person first named as such in the annual return or prospectus. If your name is mentioned in the prospectus as promoter or annual return as promoter and you signed it, you are a promoter. Prospectus is when you do IPO and all. Okay. Second, who directly or indirectly control the affairs of company. I am the person who directly or indirectly controls the affairs. Like example, directly means I formed the company and became MD. So as a MD, I directly control. Indirectly means I formed the company, I did not become MD, but 80% of the shares are with me. Indirectly, I control. What I want happens in the company. I am a promoter. On whose advice board of directors are accustomed to act. I tell anything the board of directors, tomorrow I am coming, I want a board meeting to be held at 10:30 AM and they hold board meeting. I am a promoter. But provided that for this point, this is A, this is B, this is C point. Provided that a person acting in professional capacity is excluded. See what the C point tells. If I tell anything board of directors and they do that, I am a promoter. But example, I am a professional who is giving professional advice. Like I told the MD, sir, in every quarter there should be a board meeting. You have not held board meeting. You will be subjected to fine, sir. Please hold board meeting. And then he holds board meeting. Am I a promoter? I am just giving a professional advice. Simple. Okay. I am not a promoter. Now, ABC, I hope you understood. Now, there is a question which I am asking, okay? You can read the point and then answer. Can an employee of company be promoter of the company? Yes or no? Can an employee of company be promoter of company? Yes or no? What do you think? Yes or no? Answer is yes. Sir, how come yes? See, I'll tell you. I become the MD. MD is an employee of the company. I get salary to be MD. And from the position of MD, but I can, if I control the company, affairs of company, am I the promoter? Yes, obviously yes. Did you understand? Yes, no, good, good. Okay. Okay. Now, okay, promoter you understood. Now we'll be doing the procedure of forming company beta. How a company is formed. Now I'll give you a disclaimer. First, how to form a company beta? It's very simple disclaimer statement. There are certain forms which you have to file with ROC, Register of Companies, on MCA website. File the forms. ROC will issue a certificate of incorporation that will be a proof that you have been incorporated. But I am giving a disclaimer, sir, which forms? First, I'll be teaching you via old forms, outdated forms. Now, then new forms I'll tell you. Why old forms I'm telling you? Because every form is a step. And by that form, you'll remember the steps. That's the reason. Anyways, take on the left hand side, I have written the new forms also. So pay attention. Okay. Now, because every form tells you the purpose. So now, beta, you don't have to file all the forms which I am telling now. But all the information under the old forms you have to give under one form only. Okay. So if I directly teach you the new form, beta, there will be a khichdi. Okay, you will not understand properly. Okay, mix up of everything. That's why. So see, the procedure of incorporation is given in section 7 plus Incorporation Rules 2014. Now, sir, you have to file various forms with ROC, but before that, first decide the type of company beta. Public company or private company, because it will affect your business decision making, plus better it will change your AOA also. Private company will have 3 restrictions in AOA, public will not have. So that's the reason, first thing, which type of company you have to form. Decide the type of company, draft AWA. Am I clear with this thing? Okay. Now file the following forms. First form is form run. You don't have to run with the form. The full form is reserve unique name. That is run. Am I clear with this thing? Now run form is filed for availability of name. Tell me, if I want to start a company with the name Reliance Industries Limited, will ROC allow me that? No. The first thing though, beta, I have to see the name which I want for my company. Is it available on the MCA website or not? Is this available with ROC or not? 28 lakh companies have been registered. Is it available on ROC website? No, that I have to check. So basically, I'll file a form run. In that, beta, 2 names will be provided. Okay. Now, beta, either both the names will be accepted, both will be rejected. That is on ROC. Okay. What is the law telling? A company can take any name provided it is not undesirable as per central government. From foundation point of view, undesirable means it should not be similar. Okay, for you. That if name is not similar, okay, it is not undesirable as per CG, then beta, it will be reserved for me for 20 days. That means in the next 20 days, I have to start filing the other forms. Am I clear with this thing? Okay. Next. Okay. Now, which forms I have to file? Okay, within the 20 days. First is INC 2, INC 7. INC 2 is if I am forming a OPC. INC 7 if I am forming other than OPC. This is an application of incorporation. Statutory declaration that ROC Anna, the name which you gave, I am forming a company with that name. Like that. Am I clear with this name? Next is form INC 8. What is INC 8? Declaration by a professional. Like, tell me, beta, the professional, like every promoter will not be a professional. Even though he is a professional, beta, this form is required. A professional, okay, has to sign a form in INC 8, give a declaration that this company has been formed after fulfilling all the rules and regulation applicable. Who can be this professional, beta? A CA, CS, CMA or an advocate. Am I clear? See. Declaration by professional regarding compliance of the act. It is actually the professional who forms companies, okay, for his clients. Next is form INC 9. Now, what is this INC 9? Affidavit from subscribers and directors. Now, what is affidavit, beta? Declaration on a stamp paper. Okay. I'll tell you actual meaning of affidavit. Like if you watch movies, in movies, beta, you might have watched court scenes. Court scenes, beta, when witness comes, he's like, I have seen the murder. First, beta, he has to keep his hand on a holistic book, and basically generally a Bhagavad Gita, and basically he has to tell whatever I'm telling is true to the best of my knowledge and all. Correct? So basically that orally when you say, that is called as swearing. But same thing when you give it in writing, you declare something and then you write, whatever I'm telling is true to the best of my knowledge. That is called as affidavit. If you are lying, you will be punished. Okay? That is the meaning of affidavit. Affidavit from subscriber. Subscriber means first members and directors. Okay, first directors. What declaration they have to give? That boss, they are not fraud people. In the last 5 years, no court has punished them for doing fraud, misfeasance, breach of duty in relation to formation as well as management of company. So they are fit person to be the subscribers and directors. Am I clear with this thing? Understood? To see. Declaration that none of them have been guilty by any court in last 5 years in regards to formation or management of company. They have not done fraud and all. Clear? And this declaration has to be given individually. Each person should give separate declaration. Okay. Next, form INC 22. Details of registered office. Should a company have its registered office or not? Yes. Where better authorities can communicate, can send letter, notices, documents to them. The details of registered office will be given in INC 22. And last, beta, who are going to manage the company? Who are the people who are going to manage the company? Answer is directors. So better details of first directors should be given. Now, which details will go? First is personal details. Second, DIN. DIN stands for Directors Identification Number. If you don't have DIN beta, you cannot be director. Okay. Next, consent to act as director. You have to write beta, the person who's about to become director. I hereby give my consent to be the director of this company. That consent letter has to be attached to DIR 12. And interest in other body corporates means in how many other companies you are a director. Okay, that you have to mention. So all this thing will go in which form beta? DIR 12. So which forms we studied? Form run. Two names. Okay. Name should not be undesirable. INC 2, OPC, INC 7 other than OPC. Declaration by professional. That this law is followed and then we formed company. INC 9, declaration by affidavit from subscribers and directors. We are fit person to be the subscribers and directors. Next, INC 22. Details of registered office. Last, DIR 12. Once you file all these forms, ROC will issue a certificate of incorporation, and that will be a conclusive proof that your company has been formed. Am I clear? Understood? Okay. Sir, these are the old forms I told. What are the new forms? First is SPICE 32. SPICE plus we can say. SPICE 32, INC 32. This is the first form. I mean SPICE 32 na everything goes. See, this also comes. You have to apply the name. INC 8, INC 9. This declaration. Okay. INC 22 and DIR 12. All these things beta will go in SPICE 32 now. Only one form. No separate forms. INC 33 is for MOA. INC 34 is for AOA. Separate AOA and MOA you have to file in these forms. Now only three forms you have to file, and ROC will issue a certificate of incorporation. That will be enough for forming company. Okay. SPICE full form is Simplified Pro Forma for Incorporating Companies Electronically. Then now a very important section, but a very important section. Section 9. Sir, ROC will give a certificate of incorporation and it will be a proof that we have been incorporated. Understood. Sir, but from which date it is assumed that the company has been incorporated? Answer, the date mentioned in the certificate of incorporation, date mentioned is the effective date of incorporation. Understood? So maybe your company, like example, you have received certificate of incorporation on 15 January, but the date mentioned in that certificate is 13 January. So what is the effective date of incorporation? 13 January. Am I clear with this thing? Understood properly? Clear? Okay. Now, so this is incorporation part. I hope you understood incorporation part properly. Okay. Now coming to the modern art. Okay, I love this part, modern art. We'll do this thing and then we'll take half an hour break. Okay. Modern art. Guys, what do you think? What is this? What do you think? What is this? Tell me. Comment. What is this? Target. Very good. Target. Very good. Very good. And anything else? Target. Anything else you can see in this? Very good, Mohit. And what do you think? What is this? Vada. Okay. Target, Vada, and only two things you see. Grow your imagination, boys and girls. Donut. Okay. And what is this? Only concentric circles. Okay. Onion ring. Eduvada. Okay. That's it. YouTube people also can answer. What do you think? What is this? What is this? Only this much. Wow. Okay, good. Okay. So I'll tell you. This is Awa and this is Mawa. Okay. I always tell this thing that boss, my Copyrights are registered on this. You please don't draw this thing anywhere else. Now sir, why copyrights? Because this diagram itself will give you some answers. Now, what answers it will give? See, understand. Tell me, which is the bigger circle? MOA. The MOA is the most important document of the company, the charter of the company. Then AWA. AWA is also an important document, but it is secondary to MOA. Okay, so basically it is secondary to MOA. Important document, but secondary to MOA. Now tell me, as it is secondary, can you write anything in the AWA which is not allowed by the MOA? Answer is no. Simple. The AWA cannot exceed MOA. Third, sir, which is the boundary of the company? What do you think? It is MOA. So MOA is the boundary. So anything what a company can do must be mentioned in the MOA. Anything not written in the MOA, can the company do? No. The MOA sets the scope of activities of company. Like example, the main objects of a company is example steel manufacturing. Can they undertake fertilizer manufacturing contract? No. It is beyond the MOA. That is void ab initio. Am I clear with this thing? You can't do it. Basically, what a company can do is mentioned in the MOA. So basically, MOA sets the scope of activities of company. Okay, what does AWA do then? See, which is the internal circle? AWA. So basically AWA sets the internal rules and regulations that govern the company. That means what can be done is mentioned in the MOA, but how it can be done is mentioned in the AWA. Like if I want to see a company, I have a client, okay, and I want to see whether the company can borrow money. Which document I'll see? Beta, MOA, Memorandum of Association. Okay, borrowing power should be there in the object clause. But sir, if borrowing power is there, but I have to see beta, what is the procedure of taking loan? Who will sign the loan agreement? That where I have to see beta AWA. Am I clear with this thing? Understood? Next, sir, I'll give one more example. Okay, sir, in case the company doesn't have borrowing powers, can we write in the AWA the two directors of the company shall sign loan agreement and take loan on behalf of company? Yes or no? Answer is no, because your AWA is exceeding your MOA then. Am I clear? Crossing your MOA. You can't cross the lines. Am I clear? Be within limits. Simple as that. Understood? That is the relation of AWA and MOA. Articles of Association and Memorandum of Association. Okay? Karan Arjun. They are Karan Arjun for the company. Okay. So now some basic information I am giving you. Okay. So I hope you understood the relation of AWA and MOA. Just a minute. Just a second. Just give me a minute. Okay, now understand something important. We understood what is AVA and MOVA, the relation. But now what we'll be studying better, some basic things of MOVA, some basic things of AVA. Okay. So what is the definition of MOVA? Section 2 clause 56 define MOVA. What is MOVA beta? Memorandum of Association means the Memorandum of Association. Same thing. MOVA means the MOVA. The same reaction was there when I was a student. MOVA means the MOVA as originally framed or as altered from time to time. That means, sir, when you formed the company, you cannot form company without MOVA. So what is the MOVA? MOVA means the MOVA which was formed at the time of incorporation. But in case it is altered, then the latest altered MOVA will be the MOVA of the company. Am I clear? Understood? Now, sir, how to draft MOVA? Is there any concept on that? Yes, you don't have to draft any MOVA. Lawmakers have made everything easy for you. See, under Companies Act, Schedule 1 of Companies Act has given better draft MOVAs and draft AVAs. Draft MOA, draft AOA. Depending upon your company, you have to adopt that MOA. So MOA, draft MOA is given under table A to E. E can't be seen, na? I'll write table A to E. Like example, see, if your company is company limited by shares, then table A is the draft model MOA for you. Table B is for company limited by guarantee not having share capital. Table C is for company limited by guarantee having share capital. I told you, na, some guarantee companies also have issue share. Okay, they also issue share, some they don't issue share. Table D, unlimited company not having share capital. Table E, unlimited companies having share capital. Generally, you will find these companies. So basically, example, my company is company limited by shares like Reliance Industries Limited. Then basically table A is the draft MOA for me. I will directly adopt that thing, download that and adopt that thing. Am I clear with this thing? Okay, and frame my MOA like that. Okay. Now, sir, what is written in the MOA, sir? Sir, in the MOA there are different clauses. Name clause, registered office clause, object clause, liability clause, association or association clause, and succession clause. These are the clauses. But 6 clauses are there in all companies. 7th clause is there only in OPC. Now, what are these clauses? DK will study, okay, after the break, not now, okay, because I promised you that after our MOVA, DK I'll give you a break. Okay, so we'll take a break of half an hour now. Okay, we'll all join back at 5 o'clock. Okay, you join at 5 o'clock. We'll finish this part. I think within an hour, I'll be able to finish all these things, and I'll start with Negotiable Instruments Act. Okay, so a half an hour break. Yes, you'll get PDF. Yes, companies will be finishing by today. Am I audible, online students? Am I audible? Am I audible? If yes, give me a thumbs up quickly. Okay, great. Okay guys, let's continue the lecture. Last thing we studied was MOA. What is MOA, beta? Memorandum of Association. We studied there are 6 clauses in every company's MOA, 7 clause in case of OPC. Yes. Now let's understand the clauses. First is name clause. Name clause. Sir, what does name clause tell us? Obviously, it tells us the name of the company. It will contain the name of the company, ending with the words private limited if it is a private company, public limited or limited in case it's a public company. In case it's a OPC, then it will end with the word OPC or one person company. Yes. But this private limited is not required for which company, but a Section 8 company. Section 8 company, okay, provision is not applicable. Okay. Now, sir, if it is a Section 8 company, then beta the words association, foundation, federation, confederation, council, electoral trust can be used. These all words should be there. Am I clear? Sir, the registered office clause. What is there in registered office clause? Okay, the name of the state in which registered office is situated is mentioned. Only the name of the state, guys. The whole address is in INC 22, which we studied na. Okay, here only the name of the state will be there. Then object clause. The object clause is the heart of the MOA. It tells you the purpose of formation of company. Okay. Anything not mentioned in the object clause, can company take that contract? No, it is void ab initio. Okay. So basically, it tells the scope of activities. Anything not mentioned, can a company do? No, it is ultra wires. Ultra means beyond, wires means powers. Beyond the powers of company is void ab initio. Yes, but better if there is any incidental and ancillary activity, that can be done even if it is not mentioned in the MOA. Incidental activity means, like example, if I ask you how to make tea, so people will be like, you take water, boil it, add tea powder, milk, sugar. Yes, this is how. But better, nobody tells switch on the gas. But is it required to be told? No, it is incidental. Ancillary activity not required to be mentioned. So any incidental or ancillary activity means anything required to perform the main objects. Even if it is not mentioned, no problem. Fine. Okay, you can perform it. जैसे example, road manufacturing का business लिखा है object clause में. Road manufacturing business is mentioned. So tell me beta, road construction, not manufacturing, sorry, road construction. So in my company's MOA it is written the main objects of the company is construction of roads, railways and undertake infrastructure projects. Now can I manufacture tar? Answer is yes, because it is incidental to road construction. Simple, है ना? Liability clause, very simple, mentions liability of members of company. You have studied this thing, limited by shares, limited by guarantee, unlimited company. Same, that is a liability of member. That is what is mentioned here. Next, association clause. Now, what is association clause? No, you in association clause, beta, okay, name of subscribers is mentioned. Subscribers means what, beta? First members. Then basically how many shares they are holding. Okay, their address, occupation. Okay, everything will be written. First members. Okay, and basically plus one witness will be there, who will witness that boss in his presence we signed the MOA anyway. Subscribers, he verified our identity details. Okay, and the person who are signing the MOA and MOA are the same persons. Okay, which the document contains. It's like that. Okay, witness will also beta mention his name, address, occupation. Like example, I'll show you here. I'll show you example of that, how it is written. It is like this. Harshendra Devadiga, son of so and so, Bangalore, company secretary. Then second subscriber, Yash Solanki, son of so and all. Number of shares subscribed. Okay, signature. Okay. The third is A Limited. One company can also be subscriber of another company's MOA. They can also be the first member. Okay, but A Limited cannot sign, no. So some representative will sign. Mr. A, director of A Limited, is a representative, will sign. And then better witness, name, address, occupation, Rocky by example, KGF, gangster, okay, his signature. And at the top it will be written, we the subscribers have agreed to form ourselves as a company and subscribe the following number of shares. Am I clear? Like that. Yeah, that is the association or subscription. Next, OPC mein, only in OPC but a succession clause. Now what will be there in the succession clause? Name of nominee. The nominee's name will be there. But beta, important thing I'll tell you, if you change the name of the nominee, if you change the nominee basically, okay, I'll tell you one more clause is there, capital, I'll write it, don't worry. So basically, name is important of the nominee, but if you change the nominee, are you required to alter the MOA? Answer is no. Understood? Okay. And an important clause, okay, object clause. This object clause is important when you study inter. In object clause, beta, authorized, sorry, not object clause, capital clause. So sorry, capital clause. For inter, it is very important. Here, beta, authorized capital of company is mentioned. Capital clause, capital will be mentioned. Which capital, beta? Authorized capital. What do you mean by authorized capital? Maximum capital a company can raise by issuing shares. Okay, as a chartered accountant, capital clause is important for you because whenever you advise on capital of the company, please remember capital clause. Very important. When you come in inter, you will understand. Okay, that is capital clause. Okay, so these are the clauses 1, 2, 3, 4, 5 and 6 capital clause is there in all companies. 7th clause, succession clause only in OPC. Okay. Now, so this was about the MOA. Now let's talk about AOA. The AOA's definition is also same like MOA. AOA means the AOA of company as originally framed or as altered from time to time. Simple. But same, but here there is one difference, beta. During incorporation, can you form a company without AOA? No. Can you form a company without MOA? No. But for MOA, we had only one option, adopt the model MOAs. Here, we have two options. Adopt model MOA, model AOA. Model AOA is given in table F to J. Depending upon your company, you can adopt it. Or else you can have your own AOA also. You can draft your own AOA. But when you draft your own AOA, you cannot exclude or modify the model AOA. Sir, why sir? We can't do that. I'll tell you. See, if you read table F, G, H, I, J, what you will see it is nothing but whole Companies Act is written. I'll tell you the logic. AOA is nothing but the internal rules and regulations of the company that govern the company. And a company is governed under which act? Companies Act. So can you remove Companies Act from a company? So you prepare your own AOA. Like example, my company is a company limited by shares. I want to prepare my own AOA. I will prepare. But beta, I have to write everything which is mentioned table F plus additional points I can mention. But can I remove anything from table F? Answer is no. Understood? Clear? Okay. So table G, H, I, J. Same like MOA. Understood? Now this is important, beta. Okay. Now one question comes. Sir, can a company alter its AOA? There is yes. Because the definition itself tells no. AOA means the AOA of the company is originally framed or as altered from time to time. Yes. But company can change its AOA by passing special resolution. Special resolution means in members meeting, voting will be taken. Okay, whether you have to alter or not. And basically 75% of the vote should be in favor. 75 just for understanding. Not in terms of law. In terms of law, there is a different explanation. 75%. But beta, sometimes this point that AOA can be altered just by special resolution. Sometimes it goes against minorities, sometimes it goes against promoters. For that beta, entrenchment provision has been added. Sir, how does it go against promoters? Let's understand. For example, I am a promoter. I formed a company, private company, and I wrote in my AOA, Harsh will be director for life. I will be director for life. Because obviously I formed the company I want to be. But what happened? I wrote, so nobody can remove me, obviously. But after some years, I decided to do IPO. And post IPO, I know I'll have 20% shares. Public will have 80%. That is 80% of votes. Now, can they alter the AOA and remove that point? Yes. So what I do, before going for public issue, I alter my AOA and I write, the whole AOA can be altered by special resolution. But for that specific point, Harsh will be director for life. This point can be changed only with 90% of the votes in favor. What did I do beta? Alteration of AOA for that point I made more strict than what Companies Act tells. Now tell me beta, can anybody remove me now? No, because you need beta 90. 20% of shares are with me only. Am I clear with this thing? That is entrenchment. So what is entrenchment beta? Making alteration of AOA more strict than what is given in Companies Act. Can we do it? Yes. So we can put entrenchment provision for the whole AOA or for any specific point of AOA. When can we put? During incorporation when we draft AOA or later on also. But later on if you are doing it, so you are altering AOA, correct? So in case it's a public company, here members approval is required then for entrenchment, for adding entrenchment provision in AOA. So in case you are a public company, then by special resolution, okay, you can add entrenchment provision in AOA for any specific point. But if your company is a private company, then all the votes should be in favor so as to add entrenchment provision for a specific point. Am I clear with this? So entrenchment means making alteration of AOA more strict. Entrenchment provision means alteration of AOA would require more than 75% vote in favor. Okay. Entrenchment provision in AOA you can put during incorporation or post incorporation also. For a public company by passing special resolution 75%. For a private company unanimous approval is required. Clear everyone? Yes? Okay, good. Now, so this point is done. Okay, I hope you understood AOA wala point. If yes, then give me a thumbs up quickly. Give me a thumbs up quickly if you understood. Very good. Very good. Okay. Now, one doctrine is there which we have to study. all of us have to study. Okay, not one, three doctrines are there. Now what are these doctrines? Very important for your exam. Almost every alternate attempt they ask. Doctrines means rules. Pay attention properly. Sir, there are three rules which are applicable for all companies. All companies, be it any company, these three doctrines will be applicable. Now, which are these three doctrines? Let's understand. First is doctrine of ultra vires. Second is doctrine of constructive notice. And third is doctrine of indoor management. Properly we'll understand what is this. Okay. So doctrine of ultra vires. Ultra vires means beyond the powers. Tell me, can a company undertake any contract which is not within the MOA? No. Okay. It is ultra vires, void ab initio. Next line is written, not even all the shareholders can ratify it. What do you mean by that? Example, my company's main object is cement manufacturing. On 5th September, my company undertook contract of fertilizer manufacturing. Is ultra vires. 10th September, company passes special resolution and changes the object clause from cement to fertilizer. And 11th September, company starts manufacturing fertilizer. Can the company do it? Answer is no. The contract which you took on 5th September, it is ultra vires. It is void from the beginning. It is void from 5th September. You cannot ratify. You cannot accept it. Like minors agreement cannot be ratified. It is void from the beginning. Understood? A company shall not undertake any contract beyond its MOA. It is ultra vires the company, that is void ab initio. Not even all the shareholders can ratify such contracts. Simple. Next, doctrine of constructive notice. It is brother of ultra vires, by the way. Constructive notice. What do you mean by constructive notice? Deemed notice, assumed notice. Let's understand this thing. What is this? Okay. See, sir, when we form our AOA and MOA, we register those documents with ROC, correct? Once we register these documents with ROC, it becomes a public document. What does it become? Public document. What is the relevance of this? The relevance is that it is assumed that any person who is entering into contract with company has read the AOMOA, knows whether he is entering into an ultra-vires or intra-vires contract. Okay. And in case he enters into an ultra-vires contract and there is a loss to him, beta, can he sue the company for that? No, because it is your mistake. Why did you enter into void ab initio contract? This doctrine saves the company from outsiders. Let's take an example. I am giving loan to a company. I'm a bank. So it will be assumed that I have read the MOA and it is written and I know whether the company has borrowing powers or not. Example, borrowing powers are not written in the MOA object clause. Should I give loan? No. Then too I gave the loan, beta. Then too I gave the loan. Okay. So basically it is whose mistake? My mistake. Am I clear with this? Now beta, tomorrow beta, when the company doesn't repay me and tells you sorry, it is an ultra-vires contract, we can't repay. So basically, can I sue the company? Answer is no. Okay. So see, as per the doctrine, once AOA and MOA gets registered with ROC, it becomes public document. It is presumed that everyone entering into contract with the company has read the OA and MOA and has knowledge of the contents therein. Any loss to outsider on account of such ultra-vires contract falls on him. This doctrine saves the company from outsider. Am I clear at this? For that, there is a case law also. Ashbury Railway Carriage and Iron Company Limited versus Ritchie. Now, what happened in this case? I'll tell you. Ashbury Company had their main objects. What was written? To carry on the business of manufacturing and repairing of railway engines, railway wagons, and take general contracts. Now, general contracts means what? Related to railway engines and wagons. I mean, they can do painting work and all. These people thought that they can do anything, general contract. One day Mr. Ritchie came to them and told me, sir, I am planning to put a railway line. You finance that railway line project. Then we will hand it over to the government and then government will pay charges, will divide it. Can you do it? Ashbury company like, I will do it. Nonsense, idiots. Okay. Now, it's a ultra vires contract. Richie started laying railway line and then he asked for finance. These people were about to finance, but their lawyers told, sorry, you can't do it. It's ultra vires contract. Not even all the shareholders can ratify it. So they told, sorry, Richie, we can't do it. Richie is like, Arey, what nonsense? You told that this. He's telling the company, you told that I can do this thing with this business. So I started laying railway line. Now I have to sleep on it. I am going to sue you. Can Richie file a suit on Ashbury? Answer is no. Because it is assumed that he knew whether the contract is ultra vires or intra vires. Okay, and then why the hell did he enter into that contract? Am I clear with this? I should. Okay. Next, beta, doctrine of indoor management. Now, what is doctrine of indoor management? Doctrine of indoor management means, what this doctrine tells? Internal management. Turkant's rule, another name is that the reason is that the case law name is Royal British Bank versus Turkant. What is this? This point tells ki, sir, if I am entering into contract with the company, I will always assume that the company has done the internal procedures, whatever they had to do before accepting the contract. And then they entered into contract. Tomorrow, if it is found that they did not do the internal work, internal procedure, because of which I am facing the loss, can I sue the company for that loss? Yes. Okay, I'll give you an example of this. One related to this Companies Act and one general, so you'll understand. Understand the example. Yes. Now, understand. See, I'll put like this. I am giving loan to a company. Company asks loan from me. What is the maximum thing I'll see? EOA and MOA. In the MOA, borrowing powers was there. In the EOA, it was written 2 directors of the company will sign the loan agreement. Who will be these 2 directors? They will be authorized in the members meeting. Now, what I did now, at the most what I'll see, 2 directors have signed. And I'll always assume that they are the authorized directors. Can I enter members meeting of the company? No, obviously not. So I gave loan. Now while repayment company tells ki, arey sir, this is a void contract. We can't repay the loan because the directors who signed the contract are directors. But they were not authorized in members meeting. Company did not take members meeting. Is it my mistake, guys? Can I sue the company for my loss? Yes. So this doctrine saves the outsiders from the company. Am I clear? Understood? Now, I'll just give a simple example. It's for boys also, girls also. I'm taking example of a girl. Okay, now understand. Girls, you tell me. Example, you are getting married, and the person who's sitting behind you obviously is to be husband. He's sitting with you for the marriage rituals. You'll always assume na he's marrying with his full consent, their family's consent. They had their internal discussion. Yes, you are an outsider. Now, example, you understood that the boy is marrying you, take it out of pressure. He doesn't want to marry you, he will love someone else. Will you marry him? Obviously not. Okay. Now, beta, okay, it is your mistake or their mistake? Their mistake. Now, example, they told your father to make this thing arrangements for the marriage and he had already done, and he had incurred 10 lakh rupees expenses. Okay, but now he will not marry because of their mistake. Can your dad sue them for that 10 lakhs? There is yes. You, okay, outsider can sue the company. Am I clear with this? Simple. Okay. As per this doctrine, an outsider dealing with the company shall always assume that the company has entered into contract after complying the internal procedures of the company. Onus of any loss, onus means responsibility of any loss because of company's failure falls on the company. This doctrine saves the outsiders from the company. Royal British Bank versus Turkant. Similar case happened there. Clear? Everyone? Good. Now, beta, see. Doctrine of indoor management we understood. This doctrine saves the outsiders from the company. The outsiders can sue the company. But beta, there are 3 exceptions where outsider cannot sue the company. First is knowledge of irregularity. Now what is knowledge of irregularity? Understand. Example, I'll put it in this way. I gave loan to the company, saw two directors signing. I knew that the two directors who are signing are not authorized directors. Maybe they are my friends. Should I give loan to the company? No. Then too I gave. So I had the knowledge of irregularity. Then too I went ahead. It is my mistake. Can I sue the company now? In these cases, doctrine of intermanagement will not help. Next, suspicion of irregularity or gross negligence. Now what does this mean? Sir, if you are entering into a contract and you people clearly understand there is some point of suspicion, not clear, will you enter into the contract directly or you do some kind of basic inquiry? You will do. Like I always tell, just take this example. I was last week in Hyderabad, but this didn't happen in Hyderabad. I was going for lecture 7 o'clock and suddenly I find a guy who was on scooty and he tells me, sir, I came here to sell this earpods he had of Apple. But the person, the shop owner is not there. Morning 7 o'clock, he's not picking up my call. So I can offer you this Apple AirPods for 500 rupees. My petrol expenses will be recovered. Should I buy it? No, Apple AirPods 13,000, 14,000. How can anybody give 500 rupees? Correct? No. So if I directly purchase and if it doesn't work, tomorrow can I go to the police station? See, these guys fooled me. Police will tell he did not fool you. You are a fool, idiot. Am I clear with this thing? Understood? That is the point. Simple. The same thing here happened. There is a case law of Anand Bihari Lal. Very famous case. Mr. X, a clerk, he came and he came and he told Mr. Anand Bihari Lal, okay, I'll put it like in your terms only. Mr. X came to you. He told he's a clerk of a company and he's telling our company is selling a land. Land value is 100 crores. Okay. You went and saw the land and you liked the land. Now, sale agreement is there. Whom you want the sale agreement to be signed by? It should be director. Director should sign, managing director and all. That clerk is signing and is telling, I am authorized to sign. Will you buy the land? Will you pay 100 crores to him? Obviously not. There is a clear case of suspicion. You did not see anything, you purchased the land. Later on, company ignores that thing. We never authorized this guy. Can you say, he was the clerk of the company? I'll always assume that he had the authority. No, boss. You should have done one single call. It was a gross negligence. There was clear suspicion of something is wrong there. Then too you did not act. Okay, it is your mistake. Am I clear? Okay. Next, you should not be negligent. Okay, like that's the reason when you go to a crowded place, they will write beware of pickpocketers. If you are not aware, and the police will also not entertain you. Am I clear? Next is forgery. Now what is forgery? Doing fake signatures. What is written, beta? A company will never be liable for forgeries committed by officers or employees. Yes, company should never be liable, or else beta, every employer officer do forgery, fake signatures, and basically company has to suffer. All companies will be shut down. See, I'll give you a case. See, I am the company secretary of Tata Sons Private Limited. One day, one girl came and she told, "Yes, sir, can you issue me 100 shares of Tata Sons?" As you know, Tata Sons, one share is of 1 crore plus. One share is of 1 crore rupees, more than that. I told her, sorry, I can't issue shares to you. I told, sir, please, you might be having contacts. I told her, directors issue. I told them, okay, I might talk to the directors also, but 100 shares, 100 crore, do you have? See, this is like 100 crores cash she kept in front of me. And she told me, oh sir, see, I have money. I saw 100 crore, I forgot everything. I told, okay. Idols and all, okay, I forgot everything. I told, okay, I'll give it. I took that 100 crore, went to the company, took share certificate, did fake signatures of two directors, Changu Mangu, and issued it. Okay, she took the shares. After 1.5 years, she is understanding that no rights of member she is getting. She is not being called for members meeting. She went to the company and she told, give me my rights. Company told her, you will get the rights if you are a member. She showed, see 100 shares are there, share certificate is there, signed by Changu Mangu. Changu Mangu came and Changu Mangu said, whose signature is there? This is not our signature, it's forged, you can verify it. He told me, call her, sir, your CS. That was, he left 2 years back. I too left now, I took money and ran away, doing forgery. Why will I sit there? Now she's like, no, I will always assume that directors have signed it is share certificate of company, give my money back or give the shares. Will the company be bound to give any of this? I'm clear with this. Because company is never liable for forgeries committed by employees, okay, or officers. Understood? This is that point. So, good. Did you understand this thing? If you understood, give me a thumbs up quickly. Quickly. Very good. Very good. Okay. Now the last part of this lesson, share and share capital. Okay, pay attention. From here questions have been asked. Sir, first we'll understand share, then we'll go for a share capital. What is share, beta? Sir, share means what? Part. Section 2 clause 84. Define share means a share. Share means what, beta? Part. In the share capital of company and includes stock. This is the entire share capital of company. One small short part is called as share. Sir, what is stock? This is 1 share, 2 share, 3 share, 4 share, 5 share. Put it in a bag. Put a knot. This is one stock of 5 share. So basically stock or shares same. If I say I have one stock of 5 share, or if I say I have 5 shares, same. We say shareholder, Western countries say stockholder. Like that, nothing different. Now, shares can be in physical form or shares can be issued in demat form. This is for listed companies. Listed demat account is there in demat form, electronic form. Now, there are two types of shares. You know all these things, understand. But what do you know? Where will you lose marks? You know, if the question comes kinds of share capital, you have to write this. Am I clear? Okay. But in case question asks classification of share capital, so you have to write this. Sir, what is this? I'll tell you. Sir, what is kinds of share capital? There are two types of share. Equity share, preference share. What is equity share? But equity share means a share which is not a preference share. Very simple. Very simple. Or no? Equity share means a share which is not a preference share. Which is not preference, is equity. So then what is preference share? But a preference share means a share which gives you two preferences. Any one of the preferences it gives, it's a preference share. And you are a preference shareholder. Which preference? Payment of dividend. When dividend is given, distribution of profit. First beta, if example, there are two lines. This one line, the shareholders. If these people get the dividend first and then money is left, then these people will get. So basically they are preference, they are equity. Second, repayment of capital during winding up. When the company will go into winding up, at that time beta, take a debts are, assets are sold, debts are paid, then capital is repaid. So basically if these people beta get the capital repaid first, so they are preference. Okay, and then anything is left, then these people will get their equity. Any one in your book it is written and, but and has to be treated as or. Any one preference you get, you are a preference shareholder. Am I clear? Sir, who are the owners of company beta? Equity shareholders are owners of company. Preference shareholders are not owners. Preference share are issued as for a particular time, then they will be redeemed by the company. Am I clear? But one until preference shares are there, okay, they'll get the priority. Like example, I say ki equity shareholders are your family members, they'll always be there with you. Preference shareholders are like guests, one or the other day they will leave. But until the guests are there, all the priorities they will get. Na? If they come, mummy will say bring samosa, bring this thing, because they'll have, and then anything is left, sir, you people will have. Yes or no? Your equity, clear? So sir, what is, sir, you understood equity and preference. there any further classification of equity share? Yes. Equity shares are further classified as equity share with normal voting rights. The equity share which you people know. Here on one share, one vote is given and whatever dividend is declared that they'll get. There are something called as equity share with differential voting rights, DVR. Very few companies have issued. Here beta, there is a inverse relation of voting rights and dividend. So here it will be one share. Example, on one share you will get half votes, 2 dividend, or one share, 2 vote, half dividend. This is just an example. It can be anything like one share, 0.4 votes on one share, but you will get beta 6 times dividend. Anything. What your dividend is given, okay, declared, you will get 6 times of that. Anything that will be decided by management. Okay. Next. Preference shares beta. Preference share means a share which gives you preference in these two things. Sir, is there any further classification of preference share? Yes. Cumulative and non-cumulative. Sir, cumulative preference shares are those shares on which, see, why will anybody buy preference shares? For getting fixed dividend every year. Preference share, like it will be 9% preference share, means 9% dividend every year preference shareholders will get. But preference dividend is a distribution of profit. If you don't have profits, beta, will the company give dividend? No. But if you buy cumulative preference share, there are two types. Cumulative preference share means if the company did not give you preference share in a particular year, no problem, next year it will give, or forthcoming years it will give. It will be cumulated and given to you. But non-cumulative, if you did not get it in a particular year, don't worry, forget it like your ex and move on. Am I clear with this thing? You will not get it. That is cumulative and non-cumulative. Okay. Now, so if kinds of share capital come, write equity, preference. But if classification of share capital comes, then you have to write this thing. Authorized share capital, issued share capital, subscribed capital, called up, paid up. Okay. The model, there is definition for everything. Okay. If you are a K Shah student, then in K Shah books also we have given it properly. Now authorized capital means what beta? This is the maximum number of shares company can issue. Example, authorized capital is 100 crores divided into 1 crore equity shares of rupees 100 each. So how many shares company can issue? 1 crore shares. We know this thing. But beta, company up till now has not issued 1 crore share. They don't want to raise that much capital. Company has issued only 50 lakh shares. Think of 100 each. So what will be the issued capital? 50 crore. But maybe beta, company has offered 50 lakh shares, but investors have agreed to buy only 40 lakh shares. Maybe no. So that is subscribed capital, 40 lakh shares. That is 40 crore. So this many shares company has issued, and basically company has issued 50 crore ka shares, 50 lakh shares. Investors have subscribed 40 lakh shares, total 40 crore. But beta, company has not asked entire 100 rupees at a point of time. Company has still beta called up rupees 50 per share. So 40 lakh shares multiplied by 50. So basically 20 crore is the called up capital. Okay. Now this is 20 crore company has called, but company received from the investor, because some people may subscribe for the share but they may not pay it. Company has received only rupees 18 crores. So this is the amount paid on the shares. That is called as paid up capital. Okay. Understood properly? Clear? And paid up capital's definition is given properly. How they told you whatever the money is paid on the shares, or whatever consideration is given on shares, it can come in the form of cash. It can also come in the form of kind. Like I purchased 1000 shares, gave 1 lakh rupees. That 1 lakh is paid up. Company purchased land from me, and against that land, company did not issue me. The company did not pay me money. They issued 1 lakh rupees ka shares. So basically, the consideration for that shares came in the form of land. It can be in kind also. So basically, consideration can come in cash as well as kind, but it must be up to the face value. Anything over the face value will go into where beta? Securities premium. That will not be paid up capital. Am I clear with this thing? Understood? Like example, I'll give you example of this. A Limited, 1 share is of 100 rupees face value. One day A Limited purchased AC of rupees 10,000 from vendor. Okay, and against that they issued 80 shares. So for 10,000 rupees 80 shares are issued. So basically per share issue price will be what? 10,000 divided by 80 is rupees 125. Out of 125, 100 rupees will go into paid up capital, 25 will go into securities premium. So this will not be paid up capital, 25 rupees, okay, 100 rupees. Make clear? That is okay, paid up. So authorized, issued, subscribed, called up. I hope you understood. Cumulative and non-cumulative. See, if I buy cumulative preference shares, 9% cumulative preference share, so every year I should get 9% dividend on my face value of shares. But in case a particular year company did not give dividend because they did not make profit, so basically next year I'll get it, or forthcoming years, or at the time of redemption they'll give me. But in case I purchase non-cumulative preference shares, that means in case a particular year I did not get dividend, so I cannot claim it now in the next year. I have to forget it. Am I clear with this? Did you understand, Samiksha? Okay, chalo. So here your company law comes to an end. Companies Act 2013 came to an end. So we tried to touch every point. I hope you understood everything. If yes, just give me a thumbs up quickly. You understood. Okay, so the lesson ended. Only 2 minutes break I am giving you because we are starting with a new lesson. Okay, we'll continue in 2 minutes for 2 minutes break. Hi guys, welcome back. We'll close this. The PDF of this you'll get it. Don't worry, I'll upload it anyways. Everyone can see the notes? If yes, just give me a thumbs up. If you can see the notes, just give me a thumbs up. Yes, great. Great. Okay. Now, beta, we are going to start with Negotiable Instrument Act 1881. Okay. Yes, this act was passed in the year 1881 to govern and regulate negotiable instruments in India. Let's understand. Today we'll cover the first part of this. Sir, this whole act is made for negotiable instruments. What do you mean by that, sir? What do you mean by negotiable? Let's understand. The moment it is done, then it is we'll finish the session, so it will be uploaded in like half an hour order. Okay, Aditya? Okay. Negotiable instruments. Sir, this whole act is made for negotiable instrument. Sir, what do you mean by negotiable instrument? First thing. If I ask student, they say, sir, any instrument which is negotiable is a negotiable instrument. Very simple. What is that, sir? But sir, negotiable, what do you mean by negotiable then? Negotiable means transferable. What is negotiable? Transferable. Sir, what is to be transferred? Ownership. If the ownership of any instrument can be transferred from one person to another person, it is a negotiable instrument. So, sir, when you are talking about transfer of ownership, is there any method of transferring ownership? Yes. There are two methods of transferring ownership. If the ownership of an instrument can be negotiated, that is transferred, okay, from either or because of either of the methods or via either of the methods, then that instrument is called as negotiable instrument. First is simple hand delivery. What do you mean by simple hand delivery? Just giving the instrument. Okay, I give the instrument to you. Okay, you are the owner of that instrument. That is simple hand delivery. Okay, this is for bearer instruments. What do you mean by bearer instrument? Name of payee to whom you are paying the money is not mentioned. Example, bearer check. I'll give you example. Mr. A, okay, he has to pay 1 lakh rupees to B. Okay. So he gives a bearer check to B. Is B the owner? Yes. B had to pay C 1 lakh rupees. So B by simple hand delivery gives the check to C. Bearer check to C. Is C the owner? Yes. Can he deposit the check in his account? Yes. Can he encash the check? Yes. Basically, ownership can be transferred by simple hand delivery. Okay. Second is endorsement and delivery. Endorsement and delivery, you can write E also, endorsement. Okay, no problem. This for order instrument. Okay. Now understand, this is for order check. Example. A gives a check of 1 lakh rupees. Okay, but here he doesn't give bearer check. He writes pay to B. That is an order given. That is the reason we call it as order check. He gives an order to his bank, pay the money on the instrument to B. Basically, order check to B. Is B the owner of the instrument? Yes. Can he collect cash on that? Can he deposit in his account? Yes. Now B had to pay C 1 lakh rupees. So basically just by simple hand delivery, he gave the check to C. Now can C deposit the money in his account? Well, obviously not. Is he the owner of the check? No. Because it's a direction given that the payment should be made only to whom, beta? B. Am I clear with this? Understood? So basically C cannot be the owner. But here, so this check cannot be negotiated. Yes, it can be negotiated. Why, beta? Endorsement and delivery. B has to write, okay, endorse to at the back of the check, okay, C, and sign it. Now beta and give it to C. Now is C the owner of the check. Am I clear with this thing? Understood properly? Clear? So basically that is endorsement and delivery. So if by simple hand delivery or by endorsement and delivery, if you can transfer the ownership of any instrument, then that instrument is called as negotiable. Clear? Everyone understood? Okay, great. Now understand. See, simple sir. See, this is the explanation of negotiable instrument. I told you better, it's a law paper, you have to write the definition. So section 13 defines what is negotiable instrument. Now what does section 13 tells? Section 13 tells that in this world there are so many negotiable instruments, so many. But under this act, beta, there are only 3 negotiable instruments which are covered. And whatever we'll be studying here will be applicable only to these 3 instruments. So which are these instruments? First, negotiable instrument means promissory note, bill of exchange, check payable to bearer or to order. So which are the 3 instruments? Promissory note, bill of exchange, check, which can be bearer instrument or it can be order instrument. Am I clear with this? Understood properly? Clear? Okay. Sir, when you study negotiable instrument, there are many features of negotiable instrument. Okay, negotiable instrument can be negotiated n number of times. It can be bearer, it can be order, many features. One of the most important feature, or I can say the most important feature, okay, is this. This is because of this feature or characteristics. But why, sir, this is the most important one? The reason is that the whole Negotiable Instrument Act is drafted on the basis of this characteristics. Now what is this? See, a person who has obtained a negotiable instrument in good faith and for value gets a proper title on the negotiable instrument irrespective of the defect in the title of transfer. Okay, again I am reading. A person who has obtained a negotiable instrument in good faith and for value gets a proper title on the NI irrespective of the defect in the title of transfer. What does that mean? See, let's take an example. See, I had to pay Dharmik sum of rupees 1 lakh. So I gave a bearer check to Dharmik. Bearer check. Now Dharmik misplaced the check. The check was found by Nirav. Okay. Now Nirav, see, Nirav is a fraud guy. He is a fraud. Okay. He found the check, bearer check. Now if this check is found by people, innocent people like us, what we'll do? Okay, we will cancel the check, throw it, tear it, or we'll hand it over to the bank that, boss, I got the bearer check, nobody should misuse it. He decided to capitalize the check, Nirav. So what he did now? He went to his friend Tarun. Tarun is a mobile shop owner. Okay. So what he did? He told Tarun, Tarun, I have got this bearer check from my client of 1 lakh. You have a phone of 1 lakh, okay? I can give you the bearer check, you can encash it. Tarun trusted him. Tarun gave him an iPhone of 1 lakh and he gave him the check. Tarun deposited the check in his account. Deposited. Now, and his account got credited. Harsh got a message, Arey, Tarun, my account debited to Tarun's account. Okay, so he called Dharmik, hey, did you give this check? Did you endorse the check to some Tarun? He's like, no, where is the check? Like, sir, sir, check is not there. These people went to whom, where, beta? To Tarun and told, this is not your check, it is our money. Okay, he misplaced it, give the money back. Is Tarun the proper owner of the check? Answer is yes. Why? Because of the characteristics. What does the characteristics tell us? See, a person who has obtained negotiable instrument in good faith and for value. Did he take it in good faith or not? Did he know that boss, this check was a found out check? Okay. And for value, that is, value means giving consideration. Did he give consideration? iPhone? Yes. Okay. Gets a proper title on the negotiable instrument irrespective of the defect in the title of transferor. See, Nero's title was defective. Okay. But beta, will Tarun get that defective title? Answer is no. Understood? That is the most important characteristics of negotiable instrument. And guys, okay, one word is devolved from this characteristic. What is that word? Okay. A person who obtains negotiable instrument in good faith and for value is called as what, beta? Holder in due course. Is the hero of the lesson. And a holder in due course gets a proper title irrespective of the defect in the title of transferor. Am I clear with this? Understood properly? Clear? Yes. So basically we call him in short HDC. What do we call, beta? HDC. Clear? So a holder in due course gets a proper title irrespective of the defect in the title of transferor. Okay. Okay. If you understood, give me a thumbs up quickly. If you understood this thing, give me a thumbs up quickly. Yes, great. I'll repeat. A person who has taken negotiable instrument in good faith and after giving consideration gets a proper title irrespective of whatever happened in the past. Okay. Am I clear with this thing? He will get proper title on that instrument. He is a proper owner. Okay. Now guys, we studied better. There are three negotiable instruments: promissory note, bill of exchange, and check. Okay. Now let's understand one by one. What is this? See, promissory note. What is promissory note? I'll give you an example of this. Like if you have friends, guys, you might have encountered this situation. Your friend tells you, hey, can you give me 100 rupees? I promise I'll pay it to you tomorrow. Yes or no? But does that tomorrow come? No. So basically orally, orally everyone promises, but nobody fulfills it. So same promise, when you give it in writing, okay, that written promise is called as promissory note. Like example, Mr. X purchased goods from Mr. Y on credit of 1 month. Okay. So basically, okay, X tells Y, I'll pay you after 1 month. So Y tells, okay, don't tell me orally, give it in writing. So X writes, I promise to pay rupees, example 1 lakh, to Mr. Y 1 month after date. Okay, this written promise is nothing but promissory note. Am I clear with this thing? Understood? So here we'll be covering the definition as well as the characteristics better. Okay, both will be covered here. See, an instrument, promissory note means an instrument in writing. In writing, not being a currency note or bank note. I'll tell you what is that. Containing an unconditional undertaking. Okay, now what is basically here we'll divide undertaking. Undertaking means what, beta? Promise. Now, so basically, I promise to pay. When I say it's a promise, so I promise to pay should be there. Tell me, is it a promissory note? This word should be there generally. I promise to pay. So if I tell I promise to pay Mr. X a sum of is 1 lakh, will it be a promissory note? Yes. But if I say I know I owe 1 lakh to Mr. X, will it be a promissory note? No, because I'm not promising to pay. So undertaking means promise should be there. I promise to pay. This word should be there generally, but there is an exception. Exception means in this line which I am telling here, I promise to pay is not there, but then to better it's a promissory note. Now which is this line? See. I acknowledge myself to be indebted to Mr. B for rupees 5,000 to be paid on demand. So I tell, Mr. A is telling, I acknowledge myself. I know I have to pay Mr. B rupees 5,000, okay, on demand. I give it in writing and give it to B. So indirectly, I am telling Mr. B, you can come at any point of time and collect the payment from me. Indirectly, I am telling Mr. B, you come at any point of time, I'll make the payment to you. Yes or no? So whenever it's a demand instrument, payable on demand. Okay, there are two types of instrument. One is time instrument, one is demand instrument. Time instruments means time is written after 1 month, after 10 days, after 5 days. Payable. Demand means payable on demand. So whenever there is a demand instrument, then beta I promise to pay is not. Am I clear with this? Understood properly? Clear? Yes. Now, it's an instrument in writing containing an unconditional undertaking. Unconditional means what, beta? Beta, whenever you promise to pay, that promise should not be subjected to any condition. What do you mean by condition, beta? It's a phenomena which may or may not happen. If the phenomena does not happen, you may escape your liability. That's the reason, beta, okay? Whenever you promise to pay, beta, it should be unconditional. Like if I say, I promise to pay Nivedita a sum of rupees 1 crore if she secures first rank in CA Inter exams, will it be a promissory note? Answer is no, because it is subject to condition. I promise to pay Mr. X 1 crore rupees if he jumps out of the window, and window is on second floor, okay, and stands on his 2 feet. Obviously not. He may stand on his 2 feet, he may not have feet at all. Yes or no? So that is subject to condition. It is not a promissory note. But tell me, if I write this thing, I promise to pay Mr. X a sum of rupees 1 lakh 4 days after the death of my father. Is it a promissory note? Answer is yes. Because beta, death is not a condition. Okay, death is it like my father may die or may not die? No. Okay, I'm not telling about my father, Mr. X. Okay, so basically beta, it may happen, it may not happen, or it will happen. It will happen, guys. Death is never a condition. Death is the most certain thing in everyone's life. That's the reason condition as to death is never considered as a condition. Am I clear with this? Understood properly? Clear, everyone? Yes. So see, an instrument in writing containing an unconditional undertaking, okay, signed by the maker. Who's the maker, beta? The debtor or creditor? Debtor, because he is telling, I promise to pay. The debtor. To pay a certain sum, very important. The sum of money which you are paying, you are promising to pay, should be certain. I promise to pay Mr. X 1 rupee is also promissory note. I promise to pay Mr. X 5,000 or 7,000. Will it be a promissory note? No, because the amount is not certain. Yeah. Of money only. Now, what is money only? Promise should be to pay money only, better. I promise to pay rupees 5,000 to Mr. X. Is it a promissory note? No. Or yes? Answer is yes. Because it is money. I promise to give my nano car to Mr. X. Will it be a promissory note? Answer is no, because money is not there. I promise to pay 5,000 rupees and give my nano car to Mr. X. Will it be a promissory note? Answer is no. The reason is that it is money and in kind. Promise should be to pay money only. Money only. Am I clear? To a certain person. To a certain person means what, beta? Very important. The pay should be a certain person. Understand here. If I write, I promise to pay Mr. X a sum of rupees 1 lakh. Okay. Is it a promissory note? Yes, because Mr. X is a certain person. I promise to pay Mr. X and Y a sum of rupees 1 lakh. Yes. X and Y both joint promises. Yes, they are certain. Okay. Can I write, I promise to pay the bearer a sum of rupees 1 lakh? Answer is no. Okay. You cannot make a promissory note payable to bearer, which Negotiable Instrument Act doesn't tell. RBI 1934 does. Promissory note cannot be made payable to bearer. Why, sir? Because if you open a currency note, There also it is written, I promise to pay the bearer a sum of rupees 100, a sum of rupees 500. Okay, yes or no? So basically it's a promissory note made payable to bearer, but it can be drafted only by RBI. That's the reason, beta, in order to distinguish promissory note and currency note. So promissory note and currency note, it is written not being a currency note. Currency note is also promissory note but payable to bearer and which can be drafted only by RBI. Understood? That is the point. Clear? Everyone? So promissory note is an instrument in writing containing an unconditional undertaking signed by the maker to pay a certain sum of money only, okay, to a certain person. That is, pay should be a certain person. You cannot draw a promissory note payable to bearer. Clear? Understood? If you understood, give me a thumbs up quickly. If you understood, give me a thumbs up quickly. Okay, so good. Now let's understand bills of exchange. Now what does this say? If you understood promissory note, you will easily understand bill of exchange. Let's understand what is this properly. See. First, I'll explain you what is bill of exchange, how it works. Okay. Then we'll see the definition. Mr. X purchases goods on credit of rupees 1 lakh for 1 month. He will make payment to after 1 month from Mr. Y. Now Mr. Y also has to pay Mr. Z 1 lakh. The first option is that Mr. X will give it in writing to Mr. Y. I promise to pay you 1 lakh. Why don't do that thing. I will only give you an order that you have to make payment not to me but to C. So basically Y will give an order in writing. Okay, that pay to Mr. Z. Pay to Mr. Z a sum of rupees 1 lakh 1 month after date. So it's an order given by Y to X. Pay to Z. Mr. X has to accept it. Mr. Z, Y will give it in writing to Mr. X. Mr. X has to accept it by signing and give it to Y. Y will give it to whom, beta? Z. On due date, Z will come, take and claim the payment from X. Understood properly? Okay, clear everyone? Okay. Now, so here there are three parties. The person who is drawing the instrument is known as drawer. Mr. X is drawee and Z is payee. In basically promissory note, beta, X is the maker. He will write, I promise to pay Y a sum of this and so and give it to Y. Y after 1 month will show the instrument and claim payment from X. Y is the payee. Okay, so if you understood promissory note, you will easily understand bill of exchange. Bill of exchange is an instrument in writing containing an unconditional order. There it was undertaking. I promise to pay. Here it's an order, pay to Z. Signed by the maker. Who's the maker? Drawer. Directing a certain person to pay. Who's that certain person? Drawee, to pay. A certain sum. Here also sum should be certain. Of money only. Here also. To a certain person or to the bearer. So here bill of exchange can be made payable to bearer. Promissory note cannot be made payable to bearer. Am I clear with this thing? Understood? So can we write pay to the bearer? Okay, a sum of is 1 lakh 10 days after date. Answer is yes. It's a valid bill of exchange. But one thing important, bill of exchange cannot be made payable to bearer on demand. That means I can see first option, pay to Mr. X a sum of rupees 1 lakh. Okay, 10 days after date. Pay is certain and it's a time instrument. Is it okay? Yes. Pay to Mr. X a sum of rupees 1 lakh on demand. Pay is certain. Okay, on demand. It's okay. Then pay to the bearer a sum of rupees 1 lakh 10 days after date. Is it okay? Yes. Bearer plus time instrument. Okay. But pay to the bearer a sum of rupees 1 lakh on demand is not allowed. The bill of exchange payable to bearer on demand is not allowed. Bill of exchange payable to bearer, which is a time instrument, is allowed. Am I clear with this thing? Understood? Clear? Okay, perfect. Okay. Bill of exchange is completed. Now, guys, there are 3 questions which I'll be asking you. You have to answer, okay? Keeping bill of exchange in front of you. First question, just tell me true or false, okay? First question. Check is a type of bill of exchange. True, false? Check is a type of bill of exchange. True, false? See the definition and tell. Check is a type of bill of exchange. True, thumbs up. False, thumbs down. What do you think? Answer is yes. Perfect. Check is a type of bill of exchange. Why? The check is an instrument in writing containing an unconditional order. Like if I have to make payment to you, Mr. Harsh has to make payment to Mr. X. It is in writing. I'll write on the check, pay to, unconditional order. Order given to whom, beta? My bank. Signed by the maker. I sign it. Directing a certain person to pay. To whom, beta? Bank. To a certain sum of money only. To a certain person. It can be order instrument or a bearer instrument, bearer check. Simple. Very good. Second, in case of a check, drawee is always a bank. True, false? In case of a check, drawee is always a bank. True or false? True or false? Answer is true. Drawee is always a bank because I will give order to whom, beta? My bank only, na, where I have account to make payment. Answer is true. Third, check. Now I'll give you hint also. Check is always payable on demand. Now you have to think from the point of view of paying bank. Like example, my bank is ICICI Bank. I have to make payment to you. I wrote pay to your name. Okay. And basically your bank is SBI. Your bank is collecting bank, my bank is paying bank. Check is always payable on demand. True, false? What do you think? What do you think? True or false? False. Answer is true. I'll give you example. Why? See. Example, Mr. A gave check to Mr. B. Okay. Now, see, A bank is ICICI Bank. B's bank is SBI Bank. Okay. So what A did, A gave the check. B will deposit the check in SBI. SBI will show the check to ICICI. At the moment ICICI gets the check, immediately better it makes payment. Yes or no? ICICI Bank has to immediately make payment. I told you, you have to think from the point of view of paying bank. Am I clear with this thing? So the check is always payable on demand. So see, what is check? Check is a bill of exchange drawn on a specified bank, okay, which is always payable on demand. Am I clear with this? And includes electronic image of a truncated check and check in electronic form. Now what is this? Sir, what is this? These are two things. The electronic image of a truncated check, I'll tell you. Example, A had to give payment to B. This bank is ICICI, this bank is SBI. Okay. Now understand, see, he gave a check of 1 lakh, order check. SBI, Mr. B deposited the check in SBI. SBI gives the check to ICICI and ICICI transfers funds. Okay. But better the check directly will not go. The check will go through a government RBI, can say RBI authority, which we call it as clearing houses. Okay. Now clearing houses will scrutinize the check and forward it. Now generally what they do, they'll give physical checks. But in case, like example, this branch is in Maharashtra and this branch is in Karnataka. So it will take na physical transmission of checks. So what they'll do now, this is the check, no? They'll truncate the check. Truncate the check means they'll cut this part. So now this is truncated check. Okay. They'll make an electronic image of this truncated check and send to ICICI Bank. ICICI Bank has the software, they'll decode it, okay, and transfer the funds. Now beta, what is the implication of truncation? Truncation implies that boss, this check was scrutinized, everything was correct, and payment was made through a electronic image of this check. So the electronic image of truncated check also comes under the definition of check. Am I clear with this? Understood properly? Clear? Okay. Next, check in electronic form. Now what is check in electronic form? It is nothing but a mirror image of a normal check. You see a normal check, it's the exact mirror image of that. Okay. You write pay to everything. So we will refill everything by keyboard. Okay, but how to sign this check? Now first thing to say, do we have electronic check in electronic form? Answer is no. Okay, this was initially used for transferring big payments like 100 crore, 200 crore, bank to bank payment, companies to bank payment, companies to government payment, big taxes and all. It will be stupidity if I carry 700 crore ka check in my pocket, correct? So basically this was electronic form, checks in electronic form stored in PCs. Everything can be filled by keyboard, but how to sign? Signatures were done by digital signatures. We call it as digital signatures. These are softwares. Through that softwares you have to sign it. Am I clear with this thing? Okay. Now beta, once it is signed, beta, it will be transmitted to the person to whom it is paid. Simple as that. Am I clear with this thing? So basically electronic image of truncated check and check in electronic form both come in the definition of check. Clear everyone? Yes. Basically today if you're obviously at home, take a check and ask your parent, what is this? Your parents will be like, check. Be like, no. The bill of exchange drawn on a specified banker, okay, which is always payable on demand and includes an electronic image of a truncated check and check in electronic form. Your parents will be, arey, my chartered. Am I clear? But pass also. Am I clear with this thing? Understood? Okay. So, how many of you understood properly? Promissory note, bill of exchange, check. Give me a thumbs up quickly. Wow. Great, great. So, okay. Now, we have done section number 13, 4, 5, 6. 7 is acceptance, which is not there in your syllabus. Now 8 and 9, this is very important for you. Okay, please pay attention. Very, very important for you. Understand? Sir, there are two people under Negotiable Instrument Act. Actually 3. One is holder in due course, and one not a holder. Holder in due course and not a holder. Okay. Now, first we'll do who's a holder. Understand? Now we'll do holder in due course because it is very easy for us to understand. We have already done it. Holder in due course means a person who has obtained negotiable instrument in good faith and after giving consideration. We have seen this in the earlier example. Tarun was the holder in due course in our example. See here. Yes or no? Correct? Great. Okay. So Tarun was holder in due course. Now tell me, Tarun got the check from Nirav, was a fraud. So Tarun's rights and title on the check is dependent on Nirav's title or independent? Answer is independent. So holder in due course rights and title on NI is independent to that of transferor. Holder in due course has a right to claim payment as well as right to, like example, I took some goods from you and I gave you a check. So you're a holder in due course. So basically you have a right to deposit the check in the bank, claim payment from the bank, as well as, but if the check gets bounced, can you sue me? Yes, obviously. No questions asked. But sir, let's understand about holder. Who's a holder? Sir, holder, many people think holder means a person who holds the instrument. No. Holder means a person who has a right to hold the instrument. So tell me whether he has obtained it in good faith or bad faith. Answer is good faith. But he has obtained it in good faith but without giving consideration. Sir, how can a person be obtaining good faith without giving consideration? Answer example, I gave you a check as a birthday gift. You are running an NGO, as a donation I gave it. So you took it in good faith. Did you steal it from me? No. Obviously no. Okay, so you have taken it in good faith but without giving consideration. Did you take it from me? No. You are a holder. Understood? So see, a person who has a right to hold an NI, a person who obtains NI in good faith but without consideration. Acha, tell me, holders' rights, like in our case, example, Nirav gave the check to Tarun, yes or no? Tarun was HDC, so he got proper title. But example, Tarun is Nirav's brother and he gave the check to Nirav as a birthday gift. Tarun did not know that this is a check which he found on road, Nirav found on road. So here he is a holder. Yes or no? He took it in good faith but without giving consideration. Now Tarun's rights and title on the check is dependent on Nirav's title. Nirav's title is defective, correct? Basically Tarun will also get defective title. Holder's rights and title on NI is dependent on that of transferor. Am I clear with this? Okay. Now, holder has a right to claim payment but not a right to. Did you understand? Like example, I gave a check to you as a donation for NGO. If the check is not honored, okay, or I gave a promissory note to you, I promise to pay you so and so, like kind of donation, but I did not make payment, can you sue me? No, no consideration, no contract, simple. So holder has a right to claim payment. Like if I give a check to you deposited as a donation and your account is credited, obviously you will claim payment from the bank. But beta, if the check is bounced, can you file a suit on me? Should. That is the difference between holder in due course and holder. Now one more person is there which we call him as not a holder. Now who is not a holder? Not a holder means for whom, a person who is holding the instrument but he doesn't have the right to hold the instrument. In our scenario, who was not a holder, beta? Nirav. Nirav was not a holder. Am I clear with this? Clear everyone? Properly understood? If you understood holder and holder in due course, give me a thumbs up quickly. Yeah. Did you understand now, Aditya? Holder means a person who obtains a negotiable in good faith but without giving consideration. Okay, like as a donation check, yeah, as a birthday gift. Understood? Kind of help. Okay, Aditya? Now, let's understand. Beta, now the next thing which we have to do is classification of negotiable instrument. Okay, classification. Now, like we did classification of company, we will be doing classification of NI also. Now, NI can be classified as how? I'll tell you, see. Classification of NI. First, it can be bearer instrument or order instrument. It comes in exam. Second, inland instrument or foreign instrument. Third, ambiguous instrument. And fourth, inchoate instrument. Understood? These are the four things. So let's understand one by one. Okay, what are these things? First, bearer instrument. What do you mean by bearer instrument, beta? Bearer instrument means an instrument on which name of payee is not mentioned. Very simple. No rocket science. Sir, what do you mean by order instrument then? Order instrument means an instrument on which name of payee is mentioned. Simple. Okay. Next, inland instrument and foreign instrument. Now, first thing, why are we describing inland and instrument? Of pay is not mentioned. I'll check. Why are we classifying inland and foreign instrument? But inland instrument means Indian instrument. Foreign instrument means basically which is not an inland instrument. Inland means Indian. Foreign which is not Indian. Sir, why are we classifying it first? Because beta on promissory note and bill of exchange, beta you have to pay stamp duty. Okay. Now beta, depending upon whether it's an inland instrument or foreign instrument, stamp duty rates will change. Now stamp duty is why do you pay stamp duty? Because whenever you transfer ownership of anything from one person to another, you are paying stamp duty. So on account of bill of exchange and all, okay, you are transferring the ownership of the money. That is the reason. Am I clear? Okay. So sir, what is inland instrument? For inland instrument, there are two conditions to be satisfied. Condition one is there, that is mandatory. In second condition, there are two options. Any one is fulfilled, beta, it's an inland instrument. Okay. So see, 1 plus 2A, 1 plus 2B. Okay, it's an inland instrument. Or else it will become foreign instrument. So see, inland instrument, an instrument made or drawn in India. That is inland. Okay, made in India and payable in India. Made in India, payable in India, inland. But if it is not payable in India, but it is drawn in India and drawn on a person resident in India, is it an inland instrument? Yes. So made in India, drawn in India, payable in India, inland. Drawn in India, not payable in India, but drawn on a person resident in India, it's an inland instrument. Okay, and which is not inland, it's a foreign instrument. Very simple. So I'll give you example. You tell me whether it is inland or foreign. Inland is this, foreign is this. Okay. First, Mr. X draws a bill on Mr. Y in Delhi. Payable to Mr. Z in Chennai. Is it an inland or foreign instrument? Inland instrument, obviously. Good. Second, Mr. X draws bill in Surat on Mr. Y, resident of Mumbai, to be payable to Z in China. Inland, foreign. Inland or foreign? Answer beta, it is an inland instrument. Okay, because is it drawn in India or not? Draws a bill in Surat in India. Okay, on Mr. Y, resident of Mumbai, drawn on a person resident in India. Payable in China, not payable in India. What I told, drawn in India, drawn on a person resident in India, it is also an inland instrument. Payable, it's outside, no problem. Am I clear with this? Understood everyone? You're smart here, you're smart. Very smart. Okay. Now third one, ambiguous instrument. The best question is on the fourth one. Let's see whether you can answer it. Ambiguous means what beta? Which is not clear. Okay. Or have you heard about this word amphibian animal, which can live on land as well as in water? We are terrestrial. Okay. Fishes are aquatic. Amphibian is which has characteristics of both. Same thing. What is ambiguous instrument? It is an instrument, okay, which has characteristics of both promissory note as well as bill of exchange. From one point of view, if you see, it's a bill of exchange. From another point of view, you see it's a promissory note. Now, what to treat it depends upon the payee. I'll give an example. An instrument which has characteristics of both promissory note and bill of exchange. Let's understand. A draws a bill of exchange on a sole proprietorship firm. Now what is this? A has a sole proprietorship firm, his own sole proprietorship firm. And if you see sole proprietors, na, tomorrow when you will become chartered accountants, okay, when you do audit, at that time you will understand better sole proprietors, na, small sole proprietors. They make their business payments from their business account and personal payments also from business account. They don't maintain two accounts. So A had a sole proprietorship firm. Okay, he was a sole proprietor. He had to make payment to B. What he does, he draws a bill of exchange on a sole proprietorship firm and tells pay to B. Obviously, sole proprietorship firm will accept. So A is the drawer, sole proprietorship firm is a drawee, and B is the payee. So from this point of view, it's a bill of exchange, drafting point of view. But beta, in case I see it from legal point of view, can I say beta, Mr. A and A sole proprietorship firm are same person in the eyes of law? Correct? No. So can I say here, can I replace A sole proprietorship with the word A? Yes. And A is only promising to pay B. The sum of rupees 1 lakh. Yes or no? So from legal point of view, it is a promissory note. A is only promising to pay B. Yes or no? So basically, beta, it has characteristics of both promissory note as well as bill of exchange. Now, what to treat it? It completely depends upon B. So tomorrow, if the instrument is dishonored, Mr. B will file a suit against A. So basically, now beta, he has to write it which instrument is dishonored, promissory note or bill of exchange. Completely rests on him. Understood properly? Clear? So, now understand this point properly, yeah? And I am drafting one question. If you answer the question properly, you are smart. Okay, smart enough to clear foundation. What is this beta? Inchoate instrument, section 20. Now, inchoate instrument means what beta? It is inchoate, not inchoate. Inchoate. Now, what does this see? Inchoate means incomplete instrument. Inchoate means what beta? Incomplete instrument. What does this see? Here, I'll just read it, okay? Then I'll explain it. The drawer mentions his name, signs the instrument, pays stamp duty, and hands it over to the payee. Payee has a right to complete the instrument. Now, what does this say? Big business people are there, so they don't have that much time to fill the whole instrument and give it to you. Like example, if Neeta Ambani has to pay me 1 lakh rupees, will she write the whole bill of exchange and give it to me? I don't know. If she does, 10 lakhs will come. Yes or no? So basically, what they will do, na? They will basically, their name is printed on the bill of exchange. This is from like as a person who's paying. Okay. For example, she is giving me a promissory note, so her name will always be mentioned. She will just sign it, and on that promissory note, stamp duty is paid. Okay, so stamp duty is already paid. Her name is printed. Just has to sign it and give it to me. The whole promissory note, but I have to fill. So I have the right as well as duty to fill the whole promissory note completed. It is an incomplete instrument. Including, I will have the right to include the amount also. Now you will be like, sir, you have a right to include the amount and record. So you will write any amount, like in old movies, might have seen that hero is always poor, heroine is very rich. So hero goes to meet the heroine's dad. The heroine's dad is like, okay, tells the heroine, you go inside, and tells hero, okay, leave my child, how much money you want, take the blank check, write anything. That is inchoate instrument, right? But it is not like that. There should be something written, not exceeding this. I will write 1 trillion, will you give it to me? No. Am I clear? In these people, lawmakers are not stupid like producers and directors of movies. So here, so what is this beta? Inchoate instrument. Here, if I have to pay you some money, I don't have time for small amounts. My name is printed on the instrument, okay, as the payer. I'll sign it, stamp duty is paid, I'll give it to you, I'll tell, fill the amount, fill all the terms and conditions, present it to me, I'll make the payment. That is inchoate. But guys, you will be like, sir, as a payee, I have a right to fill the whole instrument. Basically, who are the payees? So they will mention any amount. Answer, it is not like they can mention any amount. It depends upon how much money you can mention and recover. Depends upon you are a holder or you are a holder in due course. Am I clear? If you are a holder, understand, right to mention and recover amount. If you are a holder, how much amount you can mention? Holder can mention an amount not exceeding the amount intended to be paid. What does that mean? Example. I have a brother, Mr. X. It is his birthday. I'm not available, so I give him a check. Okay, bearer check, and basically I give it to him and I say, you feel any amount. Okay, beta, it's your birthday. You feel any amount, but not exceeding 1 lakh. Not exceeding 1 lakh. What is my intention to pay? 1 lakh, not more than that. I'll tell the banker, this check I have issued, do not honor it more than 1 lakh. So Mr. X can write any amount, but not exceeding 1 lakh. The holder can mention an amount not exceeding the amount intended to be paid. Clear? But sir, holder in due course. Like Mr. X is not my brother. Okay, he is a holder in due course. I purchased some goods to him and I issued a NI to him, negotiable instrument to him. So Harsh is a negotiable instrument, like say promissory note. Mr. X, okay, and purchases goods. So now X is a holder in due course. So holder in due course can mention how much amount. Holder in due course can mention an amount not exceeding the amount covered by the stamp. What do you mean by covered by the stamp? Stamp means stamp duty. Let's understand. Example, as per Indian Stamp Act, in order to transfer 1000 rupees by promissory note, you have to pay ₹1 stamp duty. Okay, hypothetically I taken. Example, I had paid 100 rupees stamp duty on the promissory note and gave that promissory note to him, to Mr. X. You complete the instrument. So what is the maximum amount that can be transferred on that instrument? 1000 into 100 divided by 1, that is 1 lakh. That instrument is valid for 1 lakh. If you mention more than 1 lakh rupees, okay, if he mentions more than 1 lakh, okay, can he recover it from me? No, because anyways that instrument is not valid to transfer an amount more than 1 lakh. Am I clear with this? Okay, that is the point. Clear? Okay, did you understand everyone? Holder and holder in due course, how much money they can write. Holder can mention an amount not exceeding that was intended to be paid. Holder in due course can mention an amount not exceeding the amount covered by stamp. If you understood, give me a thumbs up. If you have doubt, let me know quickly. Understood? Only one thumbs up. Others, did you understand properly? Okay, good. Now my question is that I am putting a question. Answer this question. The question. Mr. X purchased goods from Mr. Y worth rupees 70,000 and issued an inchoate instrument covering an amount ₹1 lakh by stamp. Mr. Y mentions ₹80,000 on the same and wants to recover it. Advice. Can Mr. Y recover it or not? Yes or no? Yes or no? What do you think? Yes or no? Yes? No? Answer is no. The reason is, see, Sir, you only told now holder in due course. Here, why is a holder in due course? He can recover an amount not exceeding the amount covered by stamp. 1 lakh rupees is the amount which is covered by stamp duty paid. Correct. But this right is for whom, beta? Holder in due course. What do you mean by holder in due course? A person who has obtained negotiable instrument in good faith and value. Good faith, good faith. Beta, did why act in good faith? No, he knew that he has purchased goods of 70. Why the hell did he write 80,000? He is not even a holder now. Make clear. He cannot recover. Did you understand? Yes, give me a thumbs up. Understood? Acha. If I continue the question, what will be your answer? If Y endorsed the instrument to Z on account of purchase worth rupees 1 lakh. Now, can Z recover rupees 1 lakh? Yes or no? Means why, rather than mentioning 80, he directly endorsed the instrument to Z, okay, and he purchased goods of 1 lakh from Z. Now Z mentions 1 lakh and wants to recover. Can he recover 1 lakh rupees? Answer is yes, because he is a holder in due course. He did not knew about that 70,000, 80,000. So he can recover 1 lakh rupees from X. Okay, but he'll be like, sir, X has to pay only 70,000. The X will pay 1 lakh to whom, better? To Z, and 30,000 will recover from Y then. Am I clear with this? Understood? Clear? Yes? Okay. If you understood, give me a thumbs up quickly, everyone. Great, great. Good. Okay. Now guys, one section I have to tell you, important section, that is dishonor of check. Important point. Generally comes in exam. Section 138. Now, it might be possible, na? Like your parents have received, they receive checks a lot of time. And basically the person has given the check to your parents, okay, he might have dishonored the check. Now your parents have to sue him. So what advice you will give to your parents? How to sue? Because yes, they have a right to sue, but subject to some terms and conditions. There are some conditions, there are some procedures to be followed. What are the conditions and procedures, that we will see? Okay, to see. Understand? Mr. Harsh, example, purchased a house from Mr. Ketan worth rupees 1 crore and issued a check of 1 crore rupees to Ketan. But Harsh dishonored the check. It is wrong. Now, can Chetan sue Mr. Harsh? Answer is yes, subject to the conditions and procedures. Now, what are the conditions and procedures? Let us understand. First, beta, check should be issued against consideration. Check should be issued against consideration. That means, beta, Ketan should be a holder in due course. Was it issued against consideration? Yes. What was the consideration, beta? House. Am I clear? Check should be deposited within the validity period. Ketan should have deposited the check within 3 months validity period. He has deposited. Now check should be dishonored because of these two reasons. Beta, only if the check gets dishonored because of these two reasons, then only, beta, Ketan can sue me under 138. Now which are the two reasons? First, insufficient funds. I issued a check of 1 crore. In my account there is only 1000 rupees. Example. Okay? So insufficient funds. Now in insufficient funds, na, one more example comes. Okay? In case of post dated check, sometimes, example, today is what date, beta? 25. I issued a check to you of 30th. and I told ki deposit on 30th. 30th I called you and I told ki, "Arey, don't deposit the check. Money is not there." Can you sue me for dishonor of check? Answer is yes. Even if the check is not dishonored, officially, okay, it is deemed to be dishonored. Then I'll do these things only. Na, you'll never be able to deposit the check. Okay. Next, beta, closure of account. I issued a check to you. Okay. And basically that bank account I closed. When if bank account is not there, funds are not there. That is also insufficient fund. Am I clear? The first reason should be insufficient fund. Second, countermanding payment. Now what is countermanding payment? I took goods from you, issued a check, and called my bank. Hey, don't honor this check. This is also wrong now. Okay. So countermanding payment. So if because of these two reasons only, if the instrument is dishonored, okay, then if the check is dishonored, then only you can sue me under 130. A signature mismatch, overwriting was done, okay, all this stuff goes in error. You can't sue me under 130. Am I clear? These are the conditions. Now what is the procedure for that? See, procedure. First, payee has to provide notice to issue payment within 30 days of acknowledgement of dishonor. Okay. What does that mean? Example, on 1st April, I gave the check, okay, to whom, beta? To Ketan. 2nd April, it got dishonored. Okay. Ketan understood the dishonored of check on 2nd April itself. The first, beta, directly can't sue me. He has to issue a notice to me, to Harsh, within 30 days. So 30 days is basically by 2nd May. He has to issue notice to me. Harsh sir, your check is dishonored. Okay. So example, he issued check to me on 2nd May only, last day, and I received the check, take on 2nd May. I received the notice. He issued a notice to me, and I got the notice on that date itself, 2nd May. So what I have to do? I have to make payment within 15 days. On receipt of notice, issuer shall pay within 15 days. So basically, I have to make payment by 17th May. Sir, if by 17th May if I don't pay, then beta, Ketan has to sue me. Ketan will sue Harsh, and he has to sue me within 1 month. Within 1 month means by 17th June. This is the last date for him to file a suit on me. If he doesn't sue me by that date, after that date, can you sue me? Answer is no. Am I clear? So again, beta, on 1st April, okay, I issued check. Check got dishonored on 2nd. Ketan understood that on 2nd. So the day when he comes to know about the dishonor, within 30 days he'll issue notice to me. Okay, example, 2nd May he issued notice to me. I received the notice on that date itself. Within 15 days I have to make payment. If there is a failure, okay, then beta, he has to sue me, okay, within 1 month. Am I clear with this thing? Did you understand the procedure? If yes, give me a thumbs up. I'm giving you a question to solve. Okay, everyone has to solve this, huh? Now everyone has to solve. See the question. Question number 12. You people have to answer, okay? Mr. Ilam issued a check amounting to INR 25,000, okay, on 2nd February 2020 to Mr. Gandhi, which was deposited by Gandhi on 16th March 2020 on in his bank account. So when the check was deposited 16th March, is it within 3 months? Yes. The check got dishonored on 17th March, okay, by the bank citing insufficient funds in the accounts of Ilam. Then Mr. Gandhi demanded the payment from Mr. Ilam by issuing the notice on 31st March 2020. When was the notice issued? 31st March. Okay. Is it within 30 days from 17th March? Yes. And which was received by Mr. Ilam on 2nd April. On 2nd April, he received the notice. Ilam was check is dishonored. Assume that Mr. Ilam failed to make the payment within stipulated time. What is the last date by which Gandhi should have made a complaint in the court? A, B, C, D. Tell me the answer. You can write it. A, B, C, D. A, B, C, D. Didn't understand? Answer is A. A. Why? On 2nd April, beta, Ilam received the notice. He has to make payment within how many days, beta? 15 days. Okay, that is 17th April. By 17th April, if he doesn't make the payment, basically in the next 1 month, beta, Gandhi should sue him. That is by 17th. Am I clear with this? Understood properly? Perfect. Clear? Yes? Okay. Hello guys. So basically, that's it for the day, for today. Okay. Tomorrow morning 7:30 will start. Okay, we'll cover this part. I think 1 hour it will take for us to cover presentment part, and then we'll start with sale of goods act mostly. Okay. Chalo. I hope you understood everything. Just give me a thumbs up if you understood everything quickly. Yes. Chalo. Okay. That's it for the day. Bye bye. Take care. Bye. It can be digital as well.